a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Bank of America will pay its staff special bonuses for working through the pandemic. Those who make $100,000 or less will get $750. Higher paid employees will get a stock award. BofA's net income plunged 35% last year. Still, it earned almost $18 billion. Meanwhile, Jamie Dimon went without a raise last year. JP Morgan kept its CEO's total compensation at $31.5 million, the same as it was in 2019. That includes a $25 million restricted stock award tied to performance. The bank's annual profit fell 20% in 2020. Still, JP Morgan made more money in the fourth quarter than it ever has in a 3-month period. And the richest person in the world is offering up $100 million. That's what Elon Musk says he'll pay toward a prize for the best carbon capture technology. The entrepreneur made the announcement on Twitter and says details would come next week. Musk is co-founder of electric car maker Tesla, of course. His fortune surged in the last year as Tesla stock took off. And that is the Bloomberg Business Flash. Francine, back to you.
Karina, thank you so much. A lot going on in the markets, just because we see a bit of movement when it comes to bond yields, not only in Italy, but also in Germany. Now, stocks in Europe sliding, along with U.S. equity futures. We did see more restrictions to curb escalating coronavirus cases, denting some of the optimism maybe that we saw in recent days. The dollar strengthening for the first time this year. A British pound weakening after Boris Johnson says the UK's third lockdown could last into the summer, and then yields on treasuries, but also German bunds edging lower. Look out for Italian bond yields as well. More reports of possible early elections. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Wartime situation, in a situation like this, you do whatever it takes.
You don't really have to worry about inflation.
We're still living through a very disinflationary COVID shock.
Banks are doing what they need to do, which is to revive an economy.
This is going to be an excellent year for growth.
The public still has money in reserve.
It's going to be enormous spending in this country. I think the boom is coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and Radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. With equity futures retreating, Tom Keene, there is still only one game in town, the handling of this pandemic.
Above the fold on every paper worldwide, and I really would emphasize, John, just in opening comments, that this is a global issue. In London, it's about London. I get it. In the U.S., it's about the U.S. The new administration, Dr. Fauci. Look at Hong Kong, where they're doing serious and selective lockdowns across the strait there to Kowloon. I mean, this is, John, it is a variable stew, but it is worldwide, and it is right now.
The struggle is real, and I have to say in the United States, the coverage of the incoming administration, Tom, has been almost giddy, dare I say, and I get it.
Every time
the
it is.
The approach, it's more coherent. It's more coherent. I understand that. The signaling is much more powerful. But let's just look at the numbers. The goal of this administration is 100 million vaccinations in the next 100 days. Tom, in the previous 7 days, in the previous week, the daily average is 940,000. We track the numbers. We're almost there. Now, you can make the argument that maybe sustaining that level is difficult and there's a lot of work to do to achieve that. But I think others would make the argument it's not bold enough. You've got to lift that target.
Well, you got to lift the target, but there's other things as well besides the growth. I thought the president yesterday extrapolating out to 500,000, as we did, I think it was 7-8 days ago, is sobering for the nation. John, what I would suggest, though, is you've got science back on the burner. That was the most important statement from Dr. Fauci, that now science is visible and listened to. That's a big, big change.
A liberated, freer Dr. Fauci down in Washington, D.C. Lisa Abramowitz through this morning into the weekend. That's where the focus is.
Yeah, absolutely. Today, we've got the Senate potentially voting on Lloyd Austin to become the defense secretary. He would become the first African-American person to serve in that role. And Janet Yellen may be confirmed as Treasury Secretary. She's got a lot on the docket, including discussing potential tax increases for wealthy Americans and corporations. Yesterday, 12:30 p.m., White House briefing will be delivered by Press Secretary Jen Psaki, as well as the National Economic Council Director Brian Deese. Very interesting to hear how they try to push forward this wartime financing, how they try to emphasize the importance of growth over deficit. The idea here of a growing deficit being important to get this economy out of a hole. And 2:45 p.m., Joe Biden is planning to speak on his response to the economic crisis and sign more executive orders. And John, to your point about the ambition going forward to try to tackle the pandemic, the concern is, number one, the virus is spreading rapidly, and you've got that new variant, which is accelerating that, and we're dealing with hospitals that are overcrowded. But two, you have supply chains that have been disrupted. You've got vaccination schedules, production schedules that have gotten delayed, and this is the real nuts and bolts of it. There are physical obstacles to getting to these goals, which are making a lot of policymakers check themselves, and a lot of economists say we are not out of the woods yet, and this is the tension right now undermining a market at record highs.
And that tension is much more intense over in Europe right now, in Germany and Italy, with delays for the vaccine rollout, starting to build up once more across the continent. We'll touch on that a little bit later. For the price action this Friday morning, good morning to you all. It looks a little something like this. On the week, firmer on the session, lower. We're down by about 25 on the S&P 500, off by 0.65%. In the bond market, Treasury set up as follows. Yields come in a couple of basis points at the long end on 30 years, down to 184, down 2 basis points, down a little more than a basis point on a 10-year, just south of 1.1%. That's the story in the US Treasury market. Tom, how many people actually made it through the ECB news conference just yesterday? Do you remember the news conference 12 months ago?
You know,
where most people fell asleep. Did it feel like that again yesterday?
I'm going to cut some slack for Christine Lagarde. To your point, John, yes, it was a diffuse conference. It was very different than the acuity that we were getting from Mario Draghi. I don't think it was as snooziest as it was, a year ago, whatever it was. But to your point, John, they're in search of a theory. I think it's a really important statement. What's the theory underpinning the way forward? And you can't do that unless you've got a fiscal policy to bounce off of. What's the fiscal policy?
Tom, I'm with you, and I have some sympathy with the ECB president as well. The outlook, the fate of the outlook now isn't just in the hands of fiscal, it's in the hands of the vaccine rollout. And Europe, compared to the United States and the UK right now, is just not there. Not close enough. Joining us now is Chris Harvey of Wells Fargo. Chris, every market participant has got an idea of when they think things start to return to normal. They've got a placeholder on the calendar. Does 1 million vaccinations a day in the United States get it done?
I think it does get it done. And here's our expectations. My dad got the vaccination over the last couple of days. I expect to get the vaccination sometime between March and June. And I would say by the end of June, what I would expect is most people that want to get the vaccination have gotten it. And so I think by the time we get to September of next year, my son is going back to school. Things look a lot more normal, and we can start to think about things as we typically have.
Chris Harvey, Bloomberg Intelligence did a nice summary on technology today. Our wonderful Poonam Goyal doing that, folks. And they just basically said, look, there's this distraction. Here's the revenue build, and here's the margin build, and the free cash flow of these tech giants. They've got to deal with a pandemic as well. Do you expect a blowout tech quarter because of COVID, because of the pandemic?
Yeah. Tom, let's talk about guidance for a second. I think it's more about guidance than it is about what you report right here, right now. And what we think is guidance across the board, whether it's tech or otherwise, is going to be good. And it'll be good, but not great. And that's fine if your stock has lagged the market, your stock is flat over the last 12 months. But if your stock is up 100, 200%, good, I don't think is good enough. So we think guidance plays a really key part in how stocks are going to react in the short term and how they'll play out over the next couple months.
So given the run-up right now, Chris, given where we are in valuations and how much we've increased our expectations for forecasts going forward, are you starting to sell? Are you starting to feel bubbly?
Am I starting to feel bubbly? At least I never feel bubbly. But are we rotating? Do we want to go to parts of the market that haven't participated? Yes. I think you know our story. We've been looking. We wanted to be more contrarian. We wanted more small caps. We wanted cyclicality. And we want to move away from the Uber caps and some of the tech and the growth names. One of the problems that we think is in the pain trade for a lot of growth companies is the recovery. And as the recovery occurs, growth is no longer scarce. That reason or that scarcity value and that premium you put on growth companies starts to disappear. And so we do want to rotate away from growth, and we do want to rotate toward situations that have been, let's just say, less picked over.
Chris, let me jump in. What you're talking about is really important. The sequencing of the return to trend growth. Now, initially, when we reopen, and hopefully that's in summer, the beginning of summer, and as we get deeper into summer, we reopen that a little bit more. We know what happens, mechanically speaking. We experienced it last year. You get that nice pop, that rebound in growth. And I'm with you. At that point, people start to believe growth isn't scarce. What I'd ask of you, though, Chris, is whether you can extrapolate out the growth rates that most people expect to see at the back end of this year into 22, into 23, into 24, and whether we've done enough on the policy side to actually adjust trend growth and get potential growth higher in the United States of America. Because making that sequential call of shutdown to reopening and rotating over to the cyclical parts of the market is one thing. Sticking with it through the cycle because you think trend growth is going to be higher and growth won't be scarce. Chris, that's a different call.
Yeah. No, John, you're absolutely right. You hit on a ton of things. There's a lot to unpack there. And one of the things we didn't touch on is, what does a tax situation look like in the second half of the year? We don't think it looks better. We think we're going to be talking about higher taxes, and how does that play into things? To answer your question, what does growth look like and can we get to trend? One of the things we've always said is we're a very, very mature economy. We have roads, we have houses, we have buildings, we have infrastructure. It takes a ton to get to 3% GDP and to stay there for some period of time. So I really don't see that going forward. We are going to get a pop. We are going to get a good situation in the second half and even in the first half of this year. But do you want to stick around for the bill? Right? When taxes come due, I'm not so sure we want to stick around for the bill. So we're more in a rent, not own type situation because of that.
Chris Harvey of Wells Fargo. Chris, enjoy the weekend. Good to catch up,
You
sir.
too.
Thank you. Tom, I think this is mission critical for a program like this to continue this conversation. That's the debate. When people start making this cyclical call over growth, what's the duration of that call?
Yeah.
And are they making a cycle call? Do they think the winners of the last cycle will be the winners of this cycle, or will they be different?
Well, no, the x-axis is everything, John. And to your point on duration, it goes to the pandemic winners as well. I mean, what Poonam's saying about Amazon, okay, that's great. They've got the huge pandemic pop, but what does it do to the x-axis afterwards as well? And that can be every conversation we have is about the timing of it. And, you know, the cliche, the bridge out there. John, where's the bridge right now? Where is our bridge to?
The bridge to where?
The bridge to
The bridge to where? The second half of this year, maybe. I can tell you, Lisa, the bridge was to where?
No, I'm talking about the bridge, John. I'm
and
talking.
Now the bridge is out to 22.
I'm talking, Lisa, about the bridge to when we get Farrow back in the office. I mean,
the bridge is getting shorter.
The bridge is. I'm
waiting. Rumor has it. There's a birdie saying that bridge got short. Yeah, but we can discuss that another time. There's a question I will say about not just the growth trajectory, but the policy bubble. And those are the words of Michael Hartnett of Bank of America. This was really interesting today. He put out a paper where he said the DC's policy bubble is fueling Wall Street's asset price bubble. There's that B word. When those who want to stay rich start acting like those who want to get rich, it suggests a late-stage speculative blow-off. Well, this blow-off could potentially last longer than people can remain solvent trying to get out of it. Or short it, John, but this raises a conundrum. Does growth even matter? Do any of these metrics matter? Or is it all about what happens fiscally and monetarily?
I can tell you that we can start a drinking game early this weekend, at least from the word bubble. Shot, bubble, shot.
It's the words
Start
of Michael
playing along
Hartnett.
at home. Start the weekend
What are you
early.
drinking?
I can tell you,
Scotch?
a little bit of breaking news. I'll be back in a studio Monday morning, okay? Looking forward to that.
Are you bringing the British mug?
Lisa Abramowitz. I'm Jonathan Ferro. This is coming with me. This is Bloomberg.
Planting a flag.
With the First Word News, I'm Karina Mitchell. The Biden administration is trying to get Republicans on board for the president's coronavirus relief plan. His top economic advisor, Brian Deese, plans to meet with a bipartisan group of lawmakers to push for the bill. But the measure's $1.9 trillion price tag has led to growing opposition from Republicans. Meanwhile, President Biden's pick for Treasury Secretary is leaving the door open to a tax increase. Janet Yellen says she would work with lawmakers to fast-track a series of tax hikes on corporations and wealthy Americans. The money would be used on infrastructure and expanding the social safety net. An infectious disease expert, Anthony Fauci, says it feels somewhat liberating to work with the new president. That's after Donald Trump often tried to sideline him in the fight against the coronavirus. Fauci admitted he had to contradict the former president at times, such as when he advocated for the use of an unproven malaria drug to treat the virus. European Union leaders are painting a bleak picture of the coronavirus. They warn mutant strains will lead to longer and possibly stricter lockdowns. And there's no clear sense of when the restrictions will be lifted. Governments across the EU are struggling once again with rising numbers of infections and fatalities. And Bloomberg has learned that Samsung Electronics may spend more than $10 billion to build an advanced chip-making plant in Austin, Texas. That's a major investment the Korean firm hopes will win more American clients. It could also help Samsung catch up with industry leader Taiwan Semiconductor. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
China continues to be, recovering well. And with the opening up that's decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong, but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I can tell you, I take no pleasure at all in being in a situation of contradicting the president. So it was really something that you didn't feel that you could actually say something and there wouldn't be any repercussions about it. The idea that you can get up here and talk about what you know, what the evidence, what the science is, and know that's it. Let the science speak. It is somewhat of a liberating feeling.
A liberated Dr. Fauci in Washington, D.C. with the Biden administration. From New York City this morning, alongside a vaccinated Tom King and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures this Friday morning, a little bit negative, lower, down by 27 on the S&P 500, off by 0.7%. Positive on the week for the S&P 500, pulling back from all-time highs as we close out the week. Onto the bond market, pretty flat on a 10-year through the last 5 days. Basically where we were last Friday is where we are this Friday. Your 10-year yield about 1.09%, coming in a couple of basis points on a 10-year. And just to round things out in foreign exchange, dollar making a comeback against sterling. Euro just about positive. Euro sterling positive by about 0.1%. A slightly stronger euro in the mix this Friday morning, Tom.
And John, the real yield, the 10-year, the negative yield there, negative 1.02%. Again, in a range, I would call it. And of course, that will be identified on the real yield. Look for that this afternoon with Jonathan Ferro. And I think it's 1 and maybe 2 hours long, an incredible discussion on fixed income. Right now, an important conversation, and this is beneath the radar. Martin Schenker mentioned it an hour ago on surveillance. And right now, we're going to get focus on it with Emily Wilkins. Within the pandemic, within the first days of the Biden administration, Emily Wilkins, there is a major battle on the Senate floor that is 50-50 about the rules between Mr. Schumer and Mr. McConnell. What are they fighting about?
The filibuster. They're fighting about keeping that filibuster in place. Remember, that is the mechanism that the minority party can use to block debate on bills that they do not support. The Republicans very much want to keep that in place, but Democrats have said, look, Republicans have eliminated other precedents standing in the Senate. If we want to get anything done, we need to make sure that we keep that, that we eliminate the filibuster. That will allow us the potential to move forward for Biden.
How is the minority leader McConnell's power, Leader McConnell, different than a normal minority leader with a 50-50 vote that Vice President Harris breaks each and every time?
In some ways, McConnell's, he's the minority leader, and his powers are the same as previous minority leaders. But this time, it's very close. I mean, there are 100 senators. Every single one now counts. If McConnell can get one Democrat to defer, it means that they can't pass their legislation. If Schumer can get one Republican to join with Democrats, that means that they've got a little more oomph. And so there's definitely, McConnell's still in the minority position, but he's probably better than someone who has a minority of, say, 40 rather than his minority of 50.
Emily, let's talk about the $1.9 trillion plan that this market participants and much of this audience is so focused on right now. We've had two moderate Republicans, Senator Romney, Senator Collins, in the last 24, 48 hours, push back. Now, we hear continuously from the administration that this is going to be a bipartisan effort. How can it be when moderate Republicans aren't coming along for the ride?
Negotiations. I mean, the Biden administration has said that they plan to go and talk with both Republicans and Democratic senators about what this plan would look like, about what, if anything, they can get through. So it might not be $1.9 trillion. We might wind up with a different number. We might wind up with a smaller package. But the Biden administration is really committed to using both Biden's ties with the Senate as well as Kamala Harris's ties with the Senate to try to forge deals and get things done. So we'll see how that winds up shaping out within the next week or so.
But Emily, just to build on what John was talking about, we focus a lot about Republicans and how they're splintered in what they want. But so are Democrats, and there are a number of Democrats pushing back against this Biden plan, saying it isn't progressive enough, it doesn't give enough money to states and local governments that have been really struggling. Where are the fault lines there that are setting up the battles, and how the Democrats and sort of the more liberal wing is pushing back against Biden?
I mean, I think you've really hit on sort of the key talking points is the spending. How much does the government want to go ahead and spend after they just passed a $900 billion stimulus package last month in December? And so that's a part of a lot of discussion. I mean, there's been a lot of talk about state and local funding, how badly that's needed, funding for the vaccines. I mean, Biden has talked continually on the campaign trail and then after he won about getting those $2,000 checks to Americans. And so I think there are a lot of discussion points on the table here, and I think it's going to become clear as the Biden administration begins to engage with senators and they begin talking about what a next stimulus package would look like.
Another one of Biden's proposals is to reopen schools in the next 100 days. This goes close to home for me. I know this is not what's going to happen necessarily in New York City, and it's coming up against a lot of opposition from the labor unions, among others. How does he plan on doing this?
So what Biden asked yesterday via an executive order was just for the Education Department and the Department of Health and Human Services to just start looking into this. If they were to open schools, what kind of guidelines would those schools need to follow? What would they need to do? He's also looking into potentially diverting some funding toward that initiative of allowing schools to reopen safely, because obviously it is more expensive to have a school with those safety precautions during a pandemic. So I think, once again, that's something we're going to hear more on as the Education Department and Health Department really begin to dig into what a reopening would look like.
Emily, one final question. There's been a meme all week about the gentleman from Vermont, you know, the mittens up and all that. I want to get away from the silliness of that. What is his contribution to Senator Schumer and President Biden in the next 12 months? What can Senator Sanders do?
Senator Sanders really has a wide support across the nation for his progressive ideas. It's something that he has continually pushed when he ran for president, when, this last time, as well as in 2016. And so he kind of is a voice for the progressives in America and a strong voice for them in the Senate. Now, exactly how that will wind up in negotiations, a lot more people right now are looking toward the more moderate members to strike deals and come to compromises. But it's the Senate. Every senator can hold things up, and if Senator Sanders wants to block particular legislation because it's not progressive enough, he might have the ability to do so if Democrats can't get Republicans to come along with them.
Emily, thank you. Great to catch up. Emily Wilkins there, down in Washington, D.C. on the latest. Tom, I'm sorry. You can't bring that up without discussing it.
Thank you,
just
John.
can't.
Oh, come on, everybody,
You can't talk about the silliness of the meme, but then not say, but then say we're not going to talk about the silliness of the meme.
Thank you, John.
First of all, I pronounce meme right, which in itself is, an accomplishment. John, our audience is wired in. Everybody that watches surveillance worldwide is seeing Bernie with you at Liverpool, Bernie with you at Capri, Bernie with you at Key West. The photo of you and the chairman at the Green Parrot was fabulous.
My favourite is Bernie with Governor Christie on the beach. Remember that famous picture of Governor Christie on the beach?
If somebody isn't keyed in, it's Bernie Sanders at the inauguration with mittens.
Oh, come on.
Grumpy. But there are people who might not have seen it, Tom.
He was with me at my vaccination yesterday.
Save us,
From
John.
New York City for our audience worldwide, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance Live on TV and radio.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are taking some weight off of the S&P 500 this Friday morning. Good morning to you all from New York City for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Here's the state of the market this Friday morning, shaping up as follows. We retreat on the S&P 500 from all-time highs, just a little bit more, down 27, call it 28 on the S&P. We are negative about 0.7%. Outside of that, in the bond market, yields on a week basically unchanged. Your 10-year, 1.09%, coming in a couple of basis points. A flatter curve led by a move at the long end, down 3 on a 30-year to 184. And to round things out in foreign exchange, G10 mixed, euro slightly firmer. Elsewhere, the bulk of G10 weaker against the stronger US dollar. Cable, sterling, down about 0.4%. That is the cross-asset price action. With your movers back on this program, I'm happy to say a good friend, Romain Bostic. Hey, Romain.
Hey, good morning, John. You said some of the weight coming off of the S&P this morning, S&P futures. Part of that is because of Intel. We got earnings, of course, yesterday, quite a debacle of a rollout. We could talk about that later, but let's talk about Pat Gelsinger, the new CEO. He hasn't taken over yet. That's going to happen in February, but he did make an appearance on the call. The financials themselves were good. 4Q looking backwards, that beat estimates. 1Q looking forward, that also pretty much came in line with consensus. But he gave an outlook for the manufacturing capacity and, more importantly, the manufacturing strategy for Intel. And he made it clear, Intel is a chip maker with an emphasis on a maker, and they're going to continue to make chips. That was not what investors wanted to see. They really feel like that he should maybe go the outsourcing route, farm out some of the problems that they've been having internally, hand that off to Taiwan Semi or some other company out there that could maybe do it a little bit more efficiently, a little bit more cost effectively. Investors did not get that. That's probably why you're seeing the softness in the shares there. Again, he made it clear, long term, Intel is going to continue making chips. You're seeing that way there on Taiwan Semi, Tom. And IBM, another company with a CEO also relatively new here, facing some issues as well.
Okay, look, Romain, this is really important. And folks, full disclosure, I enjoyed losing money on IBM long ago and far away. What was the tone, Romain, of the IBM call? What is the urgency at that train wreck?
Well, I'll tell you what, most of the analysts that we spoke to basically don't see it as a train wreck. They were actually encouraged by it. Look, some of the numbers missed. You had declines pretty much across the board in their units. But take a look at the cloud segment. This is what people are focused on. It's the cloud and AI segment. And here's the thing. On the whole, those numbers came in slightly less. But when you break out cloud from the AI part, the cloud business did well, and that's what folks want to see. That cloud business is directly linked to that Red Hat acquisition that Arvind Krishna, before he became CEO, was instrumental in orchestrating. They want to see that work. And let me tell you, Tom, they're saying that that part of the business is working. It's just some of the legacy stuff that Arvind Krishna has to get his arms around, either jettison it or find a better way to make it work.
IBM is priced where it was in 1999, 22 years ago. How do they
still
unload?
Stuck in IBM? Is this what this is about?
I'm getting killed.
It's a personal issue for him. Power through, Romain.
We're eating saltine crackers at home. Romain, on IBM here, Romain, how are they going to get rid of the rest of the business?
Unfortunately, Tom, they didn't actually lay out any plans for jettisoning the business. There is a lot of speculation that that's going to be on the table. Keep in mind, Arvind Krishna's been on the job, 9-10 months now. So, I mean, give him a little bit more time. We had Anurag Raga, a great analyst from Bloomberg Intelligence on, and he actually made this case as well that, look, give it another few months here. You're probably going to see a little bit more talk about divestitures. That has to be on the table. They just did not outline it last night.
Romain, we need to give Tom something to drink along with those saltines. So let's talk about asset bubbles. What are you seeing on that front?
Asset bubble. Well, I heard you like Chris Harvey on just a little bit earlier, and you called it, what did you call them, bubblicious, bubbly? I forgot the term you used, but look, there's been a lot of talk about asset bubbles, and you flip it up, and you can take a look. It's where we stand here, specifically with the tech stocks and the NASDAQ, kind of above those longer-term historical averages, pretty much not only your longer-term moving averages, but of course some of those RSIs. It gives you a sense here of just how far we've come on a historical basis, relative on a historical basis. And the idea here, there's a great note making the rounds this morning from the folks over at Bank of America, Michael Hartnett over there, basically saying that, look, right now you have everybody just chasing everything. And right now, these are can't-lose trades, but we know what happens when we get to these sort of can't-lose moments in the market. Eventually, somebody loses, and it's usually spectacular.
I have no idea what that chart says. On Bloomberg Radio, you're lucky this morning. Romain Bostic, thank you. Thank you so much. Greatly, greatly appreciate it. Rumor has it it'll stick around for the close this afternoon. There are different notes out there, and as you all know, there's a lot of punditry going on. Marilyn Watson is the antithesis of punditry. She writes very terse notes about the coupon and total return. She joins now from BlackRock. I love the use of the phrase robust. You are looking towards a robust and diverse portfolio. What in fixed income with yield up, price down, what does robust mean?
So robust means a very, very strong understanding of liquidity. So we have seen a huge increase in liquidity across markets over the past year. I mean, it's been absolutely enormous. When you look at robust, it means looking at having a balanced portfolio in terms of maybe some cash, some allocation to higher yielding assets that you have a very deep understanding of, that you have done really a lot of groundwork in terms of understanding the fundamentals, that we're looking across the board, across the world. We're looking at some emerging markets. We're looking at, some investment grade, some high yield. And it really means a very, very deep understanding of every single position that we have in the fund. And it means that we really stress tested it and we understand the risk reward for every single position that we have on.
Let's get deeper into that, Marilyn. I think it's critical. Back end of last year, it was an almost lazy conversation about the global recovery, the global cycle, and getting leverage to that just by playing Europe, playing EM as well. We've come into 21 and instantly slapped around the face by the idea that things are going to be a lot more fragmented because of the vaccine rollout. Can you speak to that a little bit more, Marilyn?
Yeah, I think that's right. I mean, when you look at the 2020 versus 2021, we have started the year off on a very, very different tone. So, we do have the rollout of the vaccine, as you say, at a very different pace in different countries, different economies. We are also seeing the virus resurging in different economies and different countries as well, some cases pretty aggressively. And so we are continuing to see much more diversion and dispersion in terms of economic growth and the economic activity in the fundamentals. So you look at parts of Europe, for example, and as you were discussing earlier, you have some very severe lockdowns still in the UK, in Germany, and other parts of Europe. And you look at other countries, look at the US, and less restrictions, obviously. And so I do think when you look at economic activity, when you look at the restrictions caused by trying to inhibit the spread of the virus, and then you look elsewhere, if you look at parts of Asia, for example, we've seen a huge improvement in GDP growth in countries such as China and elsewhere. And I do think we'll continue to see that going forward, as we do see the vaccine roll out at different rates. And it still does remain to be seen as well, the efficacy of the vaccine and really, how much it really will help economic activity to improve. We think that once the vaccine has been rolled out in a meaningful way, then we really will start to see some very positive growth coming through. We're already seeing the shoots right now, and we're seeing that in the stock market and elsewhere. We can see that we think, nominal growth in particular, we think is going to be very strong as the labour market continues to improve, as areas such as sectors within the service sector start to gain momentum. So we do think we will see some positive growth going forward globally, but as you say, I think it's 100% correct. It's going to be very diverse, and the dispersion is going to be huge between different economies.
Take me through some select trades then in Europe, within asset classes, relative trades between different geographies within the continent. What are you looking at?
So on a more macro duration level, we've had this position for some time, as you know, but we're still long Italy versus short Germany. Notwithstanding the events that we're seeing in Italy at the moment, we do think we're going to continue to see, a decent amount of compression between Italy, between Germany, partly because, the ECB is going to continue to support, and they've made it very, very clear, a very, supportive financial conditions backdrop. We're also seeing further stimulus coming through in terms of fiscal stimulus in Italy. We're going to see payments start to roll through over the next 4 years in terms of the recovery plan in Europe, and that will be very meaningful, actually, when you start to see those coming through as well. So sort of on a more macro level, we do like still Italy versus Germany. When you get down into sort of more an asset class level, we do like some financials. When we think that we are going to see an improvement in growth, we might start to see, slightly higher, steeper yield curves. that should start to benefit some of the European financials that, we still think, have some value to go there as well. And then also in the securitized sector as well, again, on a case-by-case basis, but we do like some assets in the UK, for example. So I think on a sort of on a bottom-up level, particularly with our view that growth will start to come through, albeit in a diversified way, then we do think there's some very good opportunities within Europe.
When you're talking, I hear reflation trade kind of bubbling up from underneath what you're saying. And in a reflation trade, the idea of safety gets turned on its head. If yields, benchmark yields are rising, some of the safer asset classes could suffer losses or at least underperform significantly, which is what we're seeing in investment-grade credit. Right now, are you getting bearish on investment-grade corporate credit, which has lost almost 1% in the U.S. here so far this year, due to this reflation trade?
Yes, I wouldn't say that we're getting bearish, but I would say that we're becoming more cautious around valuations and around the yield and the income, literally, that you can get from those trades as well. So we have sort of shifted our portfolio a little bit from last year being very high quality, a very strong focus on investment grade in the corporate space. Now, we have gone down a little bit in terms of credit rating, in terms of the capital stack. But then we are making sure that where we have those trades on, then we have got more on in terms of a hedge, be it in a currency fashion or cash or something else. But I think you're right. We are pricing for reflation coming through, and the market is pricing that too. When you look at tips, when you look at break-evens, and a range of different asset classes. So I do think that's true, and I do think we are becoming more cautious in terms of valuations on some of the very high-quality bonds that are out there.
Marilyn, thank you. Always enjoy catching up with you. Marilyn Watson out of BlackRock. Thank you very much for joining us this morning. Futures down 0.8%, negative about 32 points. That banks trade in Europe, Tom, it's going to feel uncomfortable going through the next couple of years with an ECB not looking to move anytime soon.
Yeah, we'll have to see. I mean, it's just that simple. I mean, the trades here right now, John, this Friday, it almost feels like a reset across a lot of different things.
The year never really got started in many ways. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up shortly, New York's Lieutenant Governor, Kathy Hochul, and a little bit of news around Apple that I believe Tom's going to bring you as well. From New York, this is Bloomberg.
With the First Word News, I'm Karina Mitchell. Hospitals are getting a break in most of the U.S. Coronavirus cases are declining in 46 states. In 42 of those, the 7-day case average has fallen more than 10% from a week earlier. Still, the U.S. hasn't yet seen the full fallout from earlier infections, and deaths are likely to keep rising at a rapid pace. Meanwhile, Republicans in Congress are showing little appetite for another coronavirus stimulus bill. President Biden's top economic advisor, Brian Deese, will meet with a bipartisan group of lawmakers to push for the measure. Some Republicans say it's difficult to justify the bill's $1.9 trillion price tag. Congress recently passed a $900 billion relief package. The Senate Republican leader Mitch McConnell wants to put off Donald Trump's impeachment trial till next month. McConnell says that will give the former president time to work on his defense. The start of the trial is in limbo until House Speaker Nancy Pelosi formally transmits the single article of impeachment to the Senate. And it may be the oil market's worst-kept secret. Millions of barrels of Venezuelan heavy crude have been surreptitiously going to China. That violates a U.S. embargo. Bloomberg looked at invoices and emails. They show the lengths to which traders are going to disguise the oil's origin. They involve shell companies, ship-to-ship transfers, and adding chemicals to the oil to disguise its origin. And Bank of America will pay its staff special bonuses for working through the pandemic. Those who make $100,000 or less will get $750. Higher-paid employees get a stock award. B of A's net income plunged 35% last year. Still, it earned almost $18 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Encouraged by what I see from the president's plan for fighting COVID, and particularly his devotion to moving the supply. Thank God he is invoking the Defense Production Act. That's what we need, the most muscular possible approach to maximize the amount of supply, get it to here, to New York City, everywhere around the country, because we are running out of vaccine and we need more now.
New York City Mayor Bill de Blasio on the renewed confidence in the incoming administration. We'll discuss that in just a moment right here on Bloomberg Surveillance, live from New York City for our audience worldwide, heard on Bloomberg Radio, seen on Bloomberg TV, alongside Tom Keene and Lisa Brownvis. I'm Jonathan Ferro. Looking at the price action, 7:48 Eastern, futures negative, softer, down 30 on the S&P 500. We're off by about 0.8%. Just a little bit of a retreat, Tom Keene, this Friday morning.
A little bit of a retreat, finally a pullback. I'm not going to make too much of it technically, but nevertheless, there it is. Oil comes in as well. Brent crude 54.76. It is time to stay on this story. I was in Midtown Manhattan yesterday in the wasteland that it is. Catherine Hochul is a New York lieutenant governor of the Empire State and ensconced in Buffalo. We're going to take a moment to step away from Ms. Hoare to consider the most important athlete in America if you are a parent appalled by the jockocracy of America, the machine that makes people one sport wonders whether they go on to acclaim or not. Josh Allen is the most important athlete in America, not because he's with Hochul's Buffalo Bills, but because he was undrafted, unloved, and because he had the courage to do 3 sports in high school. Kathy Hochul, what does Josh Allen mean to your Buffalo?
Josh Allen symbolizes all that is Buffalo, the underdog, the scrappy kid who never got respect. That's been the life I grew up in, an industrial area where a lot of people left town for decades, and we had the brunt of late night jokes because of our snowstorms. And so we all relate to Josh Allen. He's one of us. I mean, his story is the story of many parts of New York State. A lot of people in this country can relate to him. That's why he's leading America's team to a great victory this weekend.
I can't tell you enough, folks, the path of Josh Allen and what a throwback it is to another time. On to the serious task at hand. Lieutenant Governor, this pandemic is here, and already I hear talk of Republicans in Washington attempting to diminish or zero state and local aid. Can you assume you'll get that aid from Washington?
Well, shame on them, for gosh sakes. I mean, do they not realize that there's one reason why we're not able to get this vaccine out there is that there has been the Trump administration that was the barrier. We need the money to be able to get this out. We need to be compensated for the $15 billion that we've lost during this pandemic. We spoke about this a lot. And the Republicans cannot be in the way. They should start reading the tea leaves. There's a reason why it's a it's a Democratic House, it's a Democratic Senate, and now it's a Democratic White House. So they ought to understand that America is not with them. America wants Washington to fight this pandemic with every resource it has, and that includes $350 billion going to state and local governments so we can start paying to get this vaccine out there and helping downtown places like Midtown Manhattan, you just mentioned, start having a comeback. And so we're focused on this, and Republicans better not get in the way.
In the meantime, Kathy, the New York State and New York City regions are facing a historic budget deficit, and Governor Cuomo put out some news this week saying that he was planning to raise the top tax rate in New York City to 14.7% state and local taxes. That would be the highest rate in the nation. How realistic is this, Kathy? I mean, what's the potential consequence in terms of the tax base and wealthier individuals continuing to leave the area?
Well, I think what you're talking about is what the governor laid out as the worst case scenario, and that's if we don't receive the $15 billion that we really think is legitimate. If you look at even a share of our population, a share that our states should be receiving of the $350 billion, if that is the amount approved, we should be getting upwards of $15 billion. And if we get less, if we get, let's say, $6 billion, then only then the governor said we're going to have to do things that none of us want to do, but we'd have to raise some of the taxes, borrow, have substantial cuts that would be extremely painful during a pandemic. And I think he laid out that scenario just so the people in Washington can understand that we can't have that as the plan A. That has to be something that we don't even get to. So our best option is to have a $15 billion share of that federal aid, and then we would not have to raise taxes. We are cognizant of the effect that has on people's decisions to stay, especially the people who are supporting our economy financially, the business makers. We understand that, but we also have to deal in the reality we cannot sustain a budget deficit that large.
Lieutenant Governor, just to finish on the issue of vaccinations and the vaccine rollout, what is the issue right now that's slowing things down from your side?
Supply.
What would you like to see?
It's absolutely supply. The Defense Production Act, if it had been invoked by President Trump even 6 months ago to have the PPE, remember we were scouring the earth just to get masks and had to go to China and compete with other countries? It was disgusting. So now we have the same scenario. We could be ramping up vaccine production. So I was at two of our sites yesterday. I was at Jones Beach, I was at Aqueduct, and I opened up all the facilities in upstate New York. We have mass distribution sites. They're doing about 500 a day, sometimes 1,000. We could double, triple that overnight. We have the capacity, we have the staff, we have everything in place. It is simply, we need that spigot turned on to be able to give us the supply. We can get it out. We're ready for it. We've been waiting. Our residents are desperately waiting for this. And we've actually administered 93% of the vaccines that we've been given. That's one of the highest in the nation. I think I heard today that Georgia had already administered about 30%. So we're getting it out there. We just need more of it.
Lieutenant Governor of New York, Kathy Hochul. Kathy, come back soon. A conversation we need to continue on the vaccine rollout. Tom, big effort, and that effort's set to ramp up, and those numbers need to climb and climb quickly.
What I learned yesterday, John, again, as I've said before, the blue-collarness of it, you know what, this isn't going to be done with some wand, 1,000 here, 10,000 there. It's going to be done one at a time, and it's literally the work of getting it done. John, what I'm interested in is the stretch over 100 days. The stretch over 200 days as we go down to the age bracket where you get the vaccine summer of 23.
Yeah, and Tom, jokes aside, I think something really frustrating for anyone in my position, in my age group, and I'm talking from my personal standpoint now, when I hear about vaccine hesitancy in the groups that have been prioritized, I'm sitting here like a lot of other people are and saying, you know what, if they're hesitant, get me in the line. And Lisa, I imagine you feel the same way.
Oh, without a doubt. And I think that that's been one of the conundrums. How do you deal with some of the reports that there was vaccine being discarded because it wasn't being used because they couldn't find enough people that that qualified for the initial phases? This is an ongoing debate. What is the most efficient way to do this? But John, why weren't these plans established months ago? Why is this still so up in the air now?
John, you know what the thing to do here is, like what Ken Langone did at NYU Langone. You go in, you get the Pfizer vaccine, they give you the blue pill on the way out, thank you, Pfizer, and then Ken Langone gave me a sheet of plywood on the way out the door.
Tom, what?
I do not want to comment on you and the blue pill.
I'm talking about the sheet of plywood, John.
Look at those
We're
markets.
just going to park
that. And I'm so pleased just looking at this clock just ticking down closer to the break and closer to the break.
我开始做直播是在今年年初的时候，主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，才能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Situation, and a situation like this, you do whatever it takes.
You don't really have to worry about inflation.
We're still living through a very disinflationary COVID shock.
Banks are doing what they need to do, which is to revive an economy.
This is going to be an excellent year for growth.
The public still has money in reserve.
It's going to be enormous spending in this country. I think the boom is coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Bramwitz, and Tom Keene, a simulcast on a beautiful Friday in New York City. We welcome all of you on radio coast to coast, worldwide on television. Good morning as well. We're going to get right to it in a moment on the seriousness of the pandemic and revisit all that with a great guest lineup, Michael Wilson of Morgan Stanley, to join us here in moments. John, what I find fascinating about the pandemic is how local each story is, and yet it's all the same. We forget it is a natural disaster.
The outlook's changing, though, Tom, and I think we came into this year thinking more about synchronized global growth, and that may well still be the story for the back half of this year. But increasingly, as January grows older, we're talking about a much more fragmented outlook because the vaccination rollout is so different. The UK relative to the continent, the mainland, Europe relative to the United States, and I think that builds up to a conversation around where the relative opportunities are, Tom, within asset classes between different geographies.
John, Germany resets GDP from 4.4%, I believe, down to 3% about 2 hours ago as well. I mean, that's a reset, John, that gets April out to July and maybe out into Q4 of this year.
Just not getting it done. Tom, we're talking about countries that have vaccinated 1% of their population so far and doing it at a really, really low rate relative to what we're seeing in the United Kingdom, in the United States, much more so in places in the Middle East, including Israel as well. We need to see that change. We know that when you start this process, you stumble out the gate and you can ramp up quickly. And I think for Europe, which is one of those three main engines of the global economy, Europe, the United States, China, and elsewhere, Tom, we want to see Europe improve if you really want to see that global synchronized growth story take place in the back half of this year.
Well, a serious half hour here for us on radio and television. Lisa Bramwitz, I mean, we've been kidding about the bubble and all that. I was in Midtown Manhattan yesterday. There's no bubble. It's shut down. I mean, we're seeing this in these cities, and they even now with the Biden administration question state and local aid.
Well, the irony here, sort of the disturbing reality, is that the longer that things remain shut down, the more that growth remains slow, the more this bubble that people talk about can build, because it's building in a future of more growth at a time when the inflation expectations are muted and you have low rates. So where else are you going to put your money? There has been so much money that's pumped into the economy that continues to be through stimulus that it's going into asset prices based on this idea that we're not necessarily going to get the inflation that could come if we do end this sooner, Tom.
Well, it's going to be interesting as well. What we're going to do, and we've really had trouble doing this over the last number of days, not only the political transition in America, but the transition of John Farrell from Capri back to New York. And John, what we're trying to do is get back on script with investment and finance. We can do that with this guest, Mike. John, Mike Wilson has just been really nuanced and supple for Morgan Stanley.
Just fantastic, the whole team over at Morgan Stanley last year, coming out of this crisis, coming out of March into spring and beyond. Mike Wilson, I'm pleased to say, joins us now. Mike, you dusted off the old recession playbook, and many people didn't want to look at it. You pushed it and pushed it hard and put on risk when others were uncomfortable, and it was the right trade to make through to the end of 2020. Into 21, Mike, everyone's still looking for that historical parallel. Do you think that's helpful right now, and where do you find it? What do you lean into?
Yeah, well, thanks, guys. Thanks for having me on. Look, I think the recession playbook, recovery playbook is right on track. Every recession crisis is different, unique in its own way, but markets, obviously look forward. And, I think the markets are very clear right now in their view about 2021. It is going to be a boom in terms of economic growth. Yeah, we have to get through these hurdles of vaccination and all the hand-wringing around politics and everything else, but ultimately the market is discounting a very powerful recovery. In fact, the move that we've seen more recently in things like small caps and the cyclical parts of the market that we've been preferring just, kind of confirms that even more for us. Here's where we think things are going next, though. The next step in the recession playbook is a consolidation for a long period of time. You always get multiple expansion as earnings are normalizing out of the recession. That's what we've gotten. Then you go through a period, you get multiple contraction as people have understood that earnings are going up. And what that means is that earnings will continue to go up in terms of revision, but multiples will come down and the market just goes sideways for a period of 6 or 7 months. When I say the market, I mean the S&P 500. That doesn't mean there's nothing to do. Right, there's going to be terrific rotation still and things to do within the equity market. That's where all the action is. It's underneath the surface.
Mike Wilson, good morning. The Herfindahl-Hirschman Index is something we study in finance. And, folks, it applies across all of the social sciences. And what this comes down to, Mike Wilson, is a measurement of the concentration in the market. I'm not going to go into the Newtonian math, but, Mike Wilson, you observe we are less concentrated.
Absolutely, Tom, and that's part of the story as well. As you come, first of all, as you go into a recession, which, we were talking about in 18 and 19, the market gets more concentrated. The returns become more narrow as the market gravitates to these larger cap companies that are somewhat defensive, and that was FANG in the last cycle. Then as you come out of the recession, what happens is that money that's been concentrated decides, hey, there's other opportunities out there, and it broadens out. And that's exactly what's happened this time around. It's a very healthy development. That's what you want to see. It's actually a confirmation once again that in fact it's not just a new bull market, it's a new economic cycle.
All right, so given the fact that that's a positive, let's go to that negative that you were talking about, because that's what I do. The next step in the playbook is consolidation and talk about potential triggers, one of them being a potential taper tantrum should the Fed start talking about reducing their monthly bond purchases. How at risk are equity valuations in that case?
Yeah, Lisa, I mean, it's, we've had a view that rates will ultimately adjust to the economic developments the way equities have, even if the Fed is on hold, because, markets are forward thinking. But, rates have been slow in that development. They've moved up, but they haven't moved up, in a way that is really disruptive to valuations yet. So absolutely, as it becomes clear, right now everybody's pessimistic on the vaccinations, right? My guess is in 2 months, people are going to be saying, wow, what a great job we did. I mean, we spent more money, we got the vaccinations down, people got vaccinated. And there's going to be a light switch at some point in the next 2 or 3 months where people realize, actually, we are going to make it. And that's when people start booking travel and they start doing things they haven't been doing. And that's when the bond market will wake up. So that's a potential risk. I don't think it's a near-term risk. I think the risk in the near term is more that things have gotten a little speculative. We see it all over the marketplace. Penny stocks, some of the chat boards are going crazy now, cryptocurrencies, you name it, right? Things are really going a little bit bonkers. And if that starts to fade, that could be another risk too, where some of the new entrants to financial markets take a little pain.
Things going a little bit bonkers, that CFA talk. I love it, Mike. When you talk, though, about a light bulb going off and the bond market kind of getting switched on here a little bit, when you see yields rise, what kind of increase could you see making a material dent in equity valuations?
Yeah, I mean, obviously nobody knows, but I would suggest that if you start to break through the levels we saw in March of last year when it was risk off even for treasuries, that technically that would open us up to some much higher levels, meaning if you get through 125 on a 10-year, it opens you up to sort of the old support, which is 150, and then you can even move higher than that. So, my experience in doing this for a long time is that markets move in a non-linear fashion, right? They kind of consolidate, and all of a sudden they wake up one day, and that's not what's priced. What's priced right now is just this very beautiful, gradual sort of rise in rates that's offset by earnings. That's possible, just not the way it usually happens.
You think in 2013 here, Mike?
Well, part of it, John. I mean, it's a little different. Like, just let me make it clear, I do not expect the Fed to come out tomorrow and say we're tapering, right? They've been very adamant about that. The Fed is committed to keeping front-end rates lower, doing their quantitative easing purchases, probably longer than they did even in the last cycle. But once again, remember, markets will move ahead. The old bond vigilante, remember the old bond vigilante? Well, right now it's the equity vigilante because, the equity markets aren't as pinned. And the equity markets are telling you in no uncertain terms, as are commodities, that inflation and growth are going to be better over the next 6 or 9 months. At some point, I do believe the bond market will move ahead of the Fed.
Mike, looking forward to staying on the journey with you through the year ahead. Mike Wilson there of Morgan Stanley. Mike, thank you. Equity futures down 26 points on the S&P 500, down 0.7%. I know one person dear to our hearts, our good friend Lisa Abramowitz, who would love to see the bond vigilantes make a comeback, Lisa, wouldn't you?
Well, it would be exciting. I mean, it would be sort of a great way to actually gauge risk in some sort of market-based way. There is a concern that a lot of people have, which is what kind of market is it? If you have somebody pushing their thumb on risk, how do you evaluate what that is? And so I do think that it would be an interesting exercise to see what that would look like if it came back. But, I mean, I'm not going to weigh in on bond vigilantes, personally.
Okay. Where did Tom go? Where did Tom go? I'm still getting over the end of the last segment.
He's
still trying
buying,
to move off from that.
He's buying a new computer, I hear.
No, I'm not buying a new computer. It's a vaccination shakedown. You know, I just, the vaccination thing, I'm like scheduling my second shot is what I'm doing. I love that phrase, John, equity vigilantes. That's it's a really historic idea to have a shift to where the equity markets show that dynamics. I'm not sure I'm on board with it because the bond vigilantes have been so demonstrably important, but nevertheless, the equity vigilantes, it's about psychology.
Well, I think the point here, and the point that's interesting, is the equity market that pushes around the central banks a little bit more, Tom, because of their presence in fixed income. Because they've insulated that so much that it's the equity market that can bully the central bank a bit more and get them to stay on course and not lift off, not taper, keep Lisa depressed, keep her complaining on this program. And to be honest with you, that's how we like it.
Somebody say bubble, please.
From New York.
Take a drink anyway.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. And I have to say, a beautiful morning in New York City.
Yes.
Good morning to you all. Futures down 27, off by 0.7%. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. President Biden will take executive actions today to immediately help Americans whose finances have been battered by the pandemic. He'll expand eligibility for enhanced food stamp programs and help veterans who are behind on their bills. An executive order also will create new tools to help pay those who haven't received their stimulus checks yet. And the president's pick for Treasury Secretary is leaving the door open to a tax increase. Janet Yellen says she would work with lawmakers to fast-track a series of tax hikes on corporations and wealthy Americans. The money will be used on infrastructure and expanding the social safety net. An infectious disease expert, Anthony Fauci, says it feels somewhat liberating to work with the new president. That's after Donald Trump often tried to sideline him in the fight against the virus. Fauci admitted he had to contradict the former president at times, such as when he advocated for the use of an unproven malaria drug to treat the virus. European Union leaders are painting a bleak picture of the coronavirus. They warn mutant strains will lead to longer and possibly stricter lockdowns, and there's no clear sense of when the restrictions will be lifted. Governments across the EU are struggling once again with rising numbers of infections and fatalities. And Bloomberg has learned Samsung Electronics may spend more than $10 billion to build an advanced chip-making plant in Austin, Texas. That's a major investment the Korean firm hopes will win more American clients. It could help Samsung catch up with industry leader Taiwan Semiconductor. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. Much more to come. This is Bloomberg.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong, but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wait for the Senate to be in session. They've now informed us they're ready to receive. The question is, are there questions about how a trial will proceed? But we are ready.
House Speaker Nancy Pelosi there. The calls for unity meet impeachment proceedings. It's a complicated effort down in Washington, D.C. at the moment. It always is. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Friday morning, equities lower, down 28 on the S&P 500. We are negative about 0.7%. Up on the week by a little more than 2% coming into Friday. We retreat just a little bit this Friday morning. Early days still in the bond market, pretty much where we were last Friday this morning. Yields 1.086% coming in a couple of basis points on a 10-year. On a 30-year yield, Tom, down 3 basis points. Just a little bit of a flatter yield curve to close out the week.
And then the real yield, the 10-year real yield, negative 1.0005%. Look for John Farrell this afternoon adding value on the fixed income market. Joining us now, Edward Mills. He's been a huge value to us at Raymond James with a legit Capitol Hill experience on the processes of Capitol Hill. We're thrilled that Ed Mills could join us this morning. Ed, Joe Manchin is front and center. How many Joe Manchins are there on Capitol Hill?
You know, there's probably at least a handful of them, and they don't get as much coverage, Tom, as Joe Manchin does. But you look at the 2 senators from Arizona, that's a lean Republican state, but there's 2 Democrats. John Hickenlooper, pretty conservative, middle-of-the-road governor of Colorado, now a Democrat representing that state. So ultimately, I do think people do use Joe Manchin as a litmus test on the Republican side, seeing if you can pick off someone. Is that Lisa Murkowski from Alaska, Susan Collins from Maine, or Mitt Romney from Utah? Those are also potential picks. So wherever we get anything out of this Congress, it's probably from that middle group that we just talked about.
I'm fascinated by this, folks, and this is what's so different. There's punditry and the whole cable news thing, and then there's people that have actually done it, like Edward Mills. Ed Mills, what do those people actually do? How do they insert themselves into the process? Is it over lunch? Is it in a brutal meeting over cocktails? How do they actually do Joe Manchin?
Well, it's over a lot of conversations. And, you know, we've had the Senate vaccinated at this point. We are going to see the Democrats and Republicans starting to hold their luncheons again, especially on the Republican side. And it's through conversation. It's through kind of seeing each other in the hallway and saying, are you okay with this? I usually talk about this as the fragile flower of consensus. It comes together, but a little bit of a push, a little bit of a pull, a little bit of pushback, that fragile flower can break apart real quick. The thing that they are also looking at, Tom, is maybe bringing back earmarks for this Congress, because when you have earmarks, not for specific companies, but for specific states and districts, you get buy-in from these members. Someone like a Joe Manchin is happy to go along if he thinks it's good for the state of West Virginia. I'd probably say the same about a number of these other senators in their states.
I like that, the fragile flower of consensus. There's also the fragile flower of infrastructure in the United States, and Pete Buttigieg was really clear on this, the nominee for Secretary for Transportation yesterday when he was addressing Congress members about the need to really upgrade the nation's infrastructure. We've been talking about the infrastructure plan for the past decade that never has been. Is there a real chance for material spending on this front this year?
There is, Lisa, and it's going to be a question of how big. I think that when we kind of started the year, the conversations were in that $1 to $2 trillion range. But to bring it back to Joe Manchin, over the weekend, last weekend, Joe Manchin was on a local political TV show in West Virginia and said, why don't we do $4 trillion? And so I think that the market is going to look at the numbers coming out of Washington, D.C., and recognize that Washington, D.C. is poised to spend a ton of money getting this done with earmarks. There is a surface transportation bill that expires in September that will need to be extended. Is that the basis? Is this something that we can do over 10 years? Can we do things that is not just bridge and roads, but investing in a kind of universal broadband to deal with the digital divide in this country, modernize a lot of our energy consumption, more carrots than sticks? That's how you get some of these lean red state Democrats on board, especially a number of them who come from energy states.
Yeah, that's exactly where I wanted to go, the actual specifics of this infrastructure plan, because we are hearing about universal broadband, but also solar energy and investment there. And that's one reason why solar-related stocks have been on fire. Is there an area that perhaps is underappreciated where you expect to see a lot of money later this year?
You know, I think those are the key areas. I mean, I would add in there, you know, electric vehicles. One thing that, in talking to some folks in D.C. this week that's underappreciated, you have the former governor of Michigan who is leading up the Department of Energy. I think I'd be pretty shocked after her tenure is up that if she hasn't done a lot to provide kind of a new future to the state that she used to represent as governor. So I'd be looking for an additional investment in electric vehicle technology there as well.
Just quickly, because we always talk about this, every time there's a new administration, can we finally get infrastructure done? Can we finally get infrastructure done? What is the one thing that's held it back?
Well, under the Trump administration, there wasn't a coordinated plan. There wasn't a key person who really tried to put this together. You had a very professional head of the Department of Transportation, and that was Elaine Chao. Her husband, the Republican leader in the Senate, Mitch McConnell, he has never been a big supporter of large infrastructure bills. That's very different from a Chuck Schumer and others in Congress. So Mayor Pete, he has national aspirations besides Kamala Harris, is the only person who ran for president who has found himself in the Biden cabinet. So having him atop the Department of Transportation, you better believe he's going to want to have an accomplishment.
Ed Mills of Raymond James. Ed, come back soon. Great to catch up, sir. Thank you.
Thank
Tom
you.
Keene, Same time, same position, same focus down in DC. It's the start of another administration and a conversation about infrastructure spending and whether we can get it done.
It is a calendar item, and there's only one calendar item, John, and that is the first Tuesday of November 2022. And, you know, we knew we'd be here. It's already upon us, and it's really interesting. And I go back to Ezra Klein's magnificent essay in the New York Times today about how new the fragile Democratic majority is versus 2010 when Mr. Obama said they took a shellacking.
Tom, just quickly here, because I do think it's important. Is this aid we're talking about now still, or stimulus? Do you think we've started to have the actual stimulus conversation
really
yet?
Good question, John. I think that stays it's a bar conversation for you and me this afternoon.
Okay, into the weekend. I look forward to that. From New York City, for our audience worldwide, with Lisa Abramovich and Tom Keene, I'm Jonathan Ferro. This is Bloomberg Surveillance.
For a typical clothes wash, up to 700,000 fibres can come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
From New York City for our audience worldwide, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. On this Friday morning, we retreat just a little bit further away from all-time highs on the S&P 500. Here's a picture, a state of play. Negative 27 on the S&P, down 0.7%. In your bond market, a bit into the long end, we're down about 2 or 3 basis points, down 3 on 30s to 184 on a 10-year yield, down 2 basis points, just south of 1.1%. Outside of that, a field of foreign exchange for you. Dollar coming back stronger against all of G10 now. Euro dollar slightly negative. Sterling down 0.6%. That's the cross-asset story. Just a moment on big tech, guys, just to reflect on the highs from early September 2020. Amazon and Microsoft are still below those levels, have not managed to get above them. Apple just about getting its head above water, just about getting over that line in the sand from early September. It just goes to underline, Tom, that some of these big tech names have struggled since early September, as the small caps and the more cyclical parts of this market have just ripped from late October onwards.
They've churned, is the way I'd put it. On a securities analysis side, Poonam Goyal, that was brilliant this morning, John, on the model revenue growth of those names going into this earnings season. The number that sticks in my head is 37%. But what's so important here, folks, is Mark Gurman is the most dominant reporter at Bloomberg News right now. Mr. Gurman, writing for years on technology, and he has not done it once or twice, but this morning, a third story, John Farrow, on Apple Computer and the products to come. And what is so important about this is the tech world is riveted with Mr. Gurman's anecdotes in reporting about the choices its Apple is making away from the iPhone to keep the pixie dust going.
The MacBook Air laptop will be lighter and thinner, Tom. I imagine it will be quicker as well. Do you know I can't stand my MacBook? And out of the computers on my desk right now, my laptop, my MacBook is sitting there with the clock on. That's all I'm using it for. And I hadn't turned it on since July. I barely use the thing. I can't stand it. Do you know why, Lisa?
Why?
I can't run the Bloomberg terminal off it properly.
Oh, well done. Well done.
But no, wait a minute. Lisa, the reason Farrow's not using his MacBook is because you can't get good Wi-Fi in Capri. Let's be clear about it.
All right. Well, I will let you guys hash that out. I do think that there's a good point, though, here, and that John was touching on it, that not all tech is the same, even in this rotation moment. This idea that when we get to the other side of the pandemic, there will be the haves and the have-nots. They can keep going on this gravy train. And certainly Apple is just minting money. And if it's not a dividend stock, if it's not just throwing off cash, they're going to do something. And I think that their innovations just sort of turbocharge that feeling, Tom, to your point.
Well,
and you know what, John? Is it a good clock?
It's a great clock. It is time.net/timer/digital clock.
Riveting.
Power user.
As soon as I got back, I did do this. I was due an upgrade, so I got the iPhone 12 Pro. That was the first thing I did. So that's my contribution to Apple. Okay.
There we go.
Hey,
but to Mark Gurman, congratulations on really foundationally changing tech news here in the last number of days. Right now, we look at the changing American economy. Thomas Conster joins us with Pictet Wealth Management as we readjust on the American economy. Thomas, good morning to you. What have you done to tweak your U.S. outlook?
Right, so our growth forecast stays at 4.7%, but we are a bit more worried about the near term. We think actually Q1 GDP could be negative, so we expect minus 2%. That's mostly due to weaker consumer spending. The fact that the virus is still there, and I would say, especially coming from a European perspective, I think there is still the risk of new strains that could also further curb consumer spending, but also affect employment.
Let's sit on the European perspective. The new strains are crucial because seemingly they're lifting the bar, the threshold to reopen these economies. We got a sense of that from Prime Minister Boris Johnson in the UK yesterday. So arguably the bar now is higher to reopen these economies because they are so worried about these new strains. And arguably what they're going to wait for, and I think this is logical, I think it's quite intuitive, they're waiting to make sure enough people in society are vaccinated. Now, Thomas, when you look at Europe right now, put all that together, the outlook's not looking pretty, is it?
Right, and you mentioned Boris Johnson, right? I mean, is no longer mentioning the April deadline for reopening the economy. It might slip into the summer, and I think now the worry is about the second quarter, because we all expected a big rebound in the second quarter. Well, at least here in Europe, but the same in the U.S., and it may not happen. I think that's the risk. Despite, I think, all the money that is injected in the economy, but the money is not circulating in the economy because people do not want to spend, and you have the government measures, not to go out, social distancing and so on. So, despite all the money being thrown at the economy, we might have an issue in the second quarter.
So the good news and the headline across on the Bloomberg terminal right now is the UK is saying that the virus may no longer be spreading exponentially. The good news is that the lockdown seems to be effective. It seems to be working. That is logical. Thomas, as you say, though, if we start to reopen and we don't have enough people vaccinated, we might be back to square one. From the perspective of market participants, the way they view this is that anything you take away will ultimately be given back later on this year into 2022. So if growth has to come in Q1, Q2 in Europe, Thomas, we get this bigger boost in the back half as we reopen into 21. Do you see it that way into 22, that give back will necessarily happen?
Well, it's true from an investor's perspective. I think the stimulus is what matters. I think you see, some boldness from governments and the fact that, deficits do not matter anymore. So some MMT mentality here, but also the fact that, central banks are really proactive, injecting a lot of liquidity in markets. I mean, the ECB is actually, buying a lot more than the Fed right now. If you look at the balance sheet as a percentage of GDP, it's just going up like massively, even more than the Fed. But I think, what investors are looking at is that basically central banks are, more than helping the economy. They're basically inundating the markets with liquidity. And I think that matters as well.
There's a tension right now, Thomas, as you've got central banks inundating the market with liquidity at a time when there might be this turning point, this pivot into a higher inflation reality, which they will tolerate. In other words, how much can they tamp down yields, and how important will it be for them to continue to do so based on the expectation of their support and how high asset values have gotten on that liquidity?
Well, let me say, two or three things. First, they're trapped, right? I mean, they cannot withdraw liquidity. They cannot raise rates that quickly, and even raise rates at all in some cases. The fact is that there's too much debt, both government debt and private debt, and it will be very complicated to tighten policy in that context. Point number two is that actually, inflation may not necessarily, go back up that quickly. There might be commodity inflation, but commodity inflation doesn't mean, consumer inflation in the longer run. So, we have to distinguish the two. And I think core inflation may stay low, which also could allow them to maintain their very accommodative stance. And my third point is, however, if you do, it's like, the bear in the honey pot. Let's be careful on the road we're on, because, yes, in the very near term, we have no inflation, but in the longer run, the more central banks lose their independence, and the more they start to go and say, credit individual bank accounts, for instance, in the textbook MMT, then I think we could be on a slippery slope, and I would start to be nervous about the financial system. We're not there yet, but I think we need to be worried about the path we're on.
Well, we'd have to have you back to have a full discussion on what that looks like, full MMT. In the meantime, this idea that the Fed, that the other central banks are going to be backstopping even companies considered zombies that perhaps would not exist should the central banks not have their back. What does that do to growth? What does that do to economic dynamism?
Right. In a nutshell, it's bad. Propelling zombies are not good for growth, because actually you need new firms. These are the ones. I believe in Schumpeter's creative destruction. You need new firms, and the new firms are the ones actually pushing up productivity. And the problem right now is that with all these, you keep alive, businesses that do not make money, that are not productive enough, and I think that's an issue. The other issue I have with economies globally, actually in the U.S. as well, is population growth. As you know, I'm really shocked by how population growth is just slowing like a lot, and I'm not seeing so far a boom in natality, in new birth in this pandemic. So I think that's something to watch as well in terms of potential growth going forward.
Thomas, great to catch up, as always. Thomas Kostluk there of Pictet Wealth Management. A couple of points near the end of that conversation I think are worth building on, Lisa. The transformational powers of capitalism, just the idea that money flows away from bad companies and towards good companies. That's the dynamism that you want in a capitalist economy. And arguably, maybe that's the trade-off here. The trade-off to build a bridge to the other side, so to speak, to work our way through this pandemic, is that you lose some dynamism in economies like Europe and elsewhere.
And it goes even deeper than that, because the bridge to the other side was given to larger companies, and they were kept alive. The ones that were not were the smaller companies that are considered the more dynamic, the more important in order to drive job growth, in order to drive economic growth in both the U.S. and Europe. And those companies have been decimated, whether it's restaurant groups, whether it's retailers, John, and the longer term impacts of that are going to be felt. It's just unclear to what degree.
Brutal. Is Tom still with us? Keep asking that.
I'm just listening. I'm fascinated. You know, folks, when we invented surveillance, it was about conversation. And sometimes a conversation is so smart, I actually just sit here and listen. I was listening to the two of you.
Nice.
I think what's important there at the end of the conversation, while I was starting my taxes, I want to mention here the demographics. Thomas is one of the 2 or 3 people this week who really noticed a demographic shift, and that folds right into nominal GDP. What do I do on line 32?
Is it one of the side effects of the vaccine that you're going to be a little quieter for the next couple of days?
That's true.
Because that I can run with. That sounds fantastic. I'm sure Mrs. Keen's enjoying that too.
Oh yeah,
alongside Tom Keen and Lisa Bravitz, I'm Jonathan Ferro. Coming up a little bit later this morning on Bloomberg TV, counting you down to the opening bell. Looking forward to catching up with Mohammed Al-Arian of Queen's College, Cambridge. We'll do that just a little bit later this morning on Bloomberg TV, on Bloomberg Radio and on Bloomberg TV. Bloomberg surveillance continues. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. Hospitals are getting a break in most of the U.S. Coronavirus cases are declining in 46 states. In 42 of them, the 7-day case average has fallen more than 10% from a week earlier. Still, the U.S. hasn't yet seen the full fallout from earlier infections, and deaths are likely to keep rising at a rapid pace. Meanwhile, Republicans in Congress are showing little appetite for another coronavirus stimulus bill. President Biden's top economic advisor, Brian Deese, will meet with a bipartisan group of lawmakers to push for the measure. Some Republicans say it's difficult to justify the bill's $1.9 trillion price tag since Congress recently passed a $900 billion relief package. Senate Republican leader Mitch McConnell wants to put off Donald Trump's impeachment trial till next month. McConnell says that will give the former president time to work on his defense. The start of the trial is in limbo until House Speaker Nancy Pelosi formally transmits the single article of impeachment to the Senate. And it may be the oil market's worst-kept secret. Millions of barrels of Venezuelan heavy crude have been surreptitiously going to China. That violates a U.S. embargo. Bloomberg looked at invoices and emails. They show the lengths to which traders are going to disguise the oil's origin. They involve shell companies, ship-to-ship transfers, and adding chemicals to oil to disguise its origin. And Bank of America will pay its staff special bonuses for working through the pandemic. Those who make $100,000 or less will get $750. Higher paid employees will get a stock award. BofA's net income plunged 35% last year. Still, it earned almost $18 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points. So continuing in this knee-jerk risk-off feel.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Safety is the foundation of the department's mission, and that takes on new meaning amid this pandemic. We have to ensure that all of our transportation systems, our aviation and public transit, our railways, roads, ports, our waterways, and pipelines, all of it is managed safely in this critical period as we work to defeat the virus for good.
A new word and a new change from the Biden administration, the message getting out on vaccination. The message no more clearer than do the courage of people that are essential workers. Maybe I'm an essential worker, I don't even know, but I'm not an essential worker, folks. What I do know is they're out there in each city, each and every day. Patrick Foy writes herd as CEO of the Metropolitan Transit Authority over his brave essential workers, and he joins us right now. Pat Foy, I thought it was wonderful that the young lad on his way to Regis mentioned the West End line, the Sea Beach line, the subway of another time for Dr. Fauci. What did he say to your employees yesterday?
Well, Dr. Fauci introduced himself to our employees as Tony from Brooklyn. And the most trusted person in America urged all transit workers, all MTA employees for that matter, to get vaccinated. I thought it was a powerful message coming from him. I invited him when we talked in that call. He told me about his commute and the Sea Beach line, which is a term that resonates with MTA old timers. But his message is for all MTA employees, and Tom, frankly, for all New Yorkers and Americans, get vaccinated. The issue now is the supply of vaccines, as Governor Cuomo has made clear. A lot of reason to be optimistic with the new president in place from a vaccination point of view, and frankly, optimism from a transportation point of view as well, Tom.
Do you have the resources, translated money and funds, to get vaccinated busy essential workers still doing their jobs through the day?
The answer is yes. The only limiting factor is not money, it's not time, it's availability of doses. The new administration is going to attack that aggressively. They talked about that yesterday. It's not a question of time. It's not a question of overtime. It's not a question of money. It's a question of doses. The governor's made that clear.
Meanwhile, when you talk about a question of money, the MTA did postpone a 4% fare hike that had been planned for at least 4 months in anticipation in getting more aid from Washington, D.C. Is this postponed or is this off the table if the MTA does receive that money?
No, Lisa, it is postponed. We've pushed it off for several months. Look, I'll quote the president's favorite poet, Seamus Heaney, when he talked about this being a moment where hope and history rhyme. I think the election of a transit-friendly, actually heavy transit user president in Joe Biden, the ascension of Senator Schumer to the Senate majority position, first ever from New York, the passage of the $4 billion for the MTA in December, and the administration's plan to fund public transit, including the MTA, lots of reason to be optimistic. I've been pretty grim in my prior appearances, and to be clear, the MTA still faces overwhelming challenges, and we're going to need an additional $8 billion over the next 3 years. But the funding that we received at the end of December will cover almost all of our deficit in 2021. We're good for 2021. We won't need to reduce service 40, 50% as we had discussed, or lay off thousands of people. And I think this may be a moment where hope and history do rhyme.
Well, there is a financial deficit that you're hoping to address. What about the reputational deficit? The idea that there are a lot of people concerned about the transmission of the virus on packed trains, on packed buses, not so much a consideration right now because they're not that packed. What are you finding in studies about the transmission of COVID, of other diseases on public transportation?
So great question. Let me approach it from 2 points of view. One is, what do our customers think? 75% of our customers surveyed say they've never seen subway stations or subway cars or buses as clean as they are now, disinfected multiple times a day. From a scientific point of view, if mask compliance is high, and on subways, buses, and the 2 commuter rails that we run, mask compliance by our customers is north of 95%. Single most important thing any customer can do to protect him or herself, fellow commuters, and our employees. And the research indicates that transit has nowhere in the world been a vector of the virus, has not been a significant contributor. We're very focused on mask compliance. I and a lot of my colleagues are going to be handing out masks again next week. The MTA police and MTA staff have that. I took an early Long Island Railroad train. I ride the subway every day. People are wearing their masks on the trains and on platforms.
Patrick Foy, Michael Kimmelman in the New York Times gave a rave review to the Moynihan train hall. You mentioned the LIRR right now. What did you learn in the successful construction of Moynihan?
Well, a couple of things. First, Moynihan Station is an incredible tribute, first to the late Senator Daniel Patrick Moynihan and to the work of my colleagues at the MTA, Jana Lieber, Michael Evans, and others at Moynihan Station, Empire State Development. These projects can get done. The other thing, Tom, is there is a new entrance to the Long Island Railroad on 7th Avenue and 33rd Street, which is breathtaking. As you go up the escalator, there are views of the Empire State Building, and you've got customers just pausing and taking selfies, which is not a great thing to do on an escalator, escalator, by the way, but it's just a striking entrance directly from 33rd Street to the Long Island Railroad area.
I love that, Tom, by the way. Did you hear that? Patrick was talking about the beauty of it and that, yeah, you do want to take a picture, but don't take a picture on the escalator. Not very safe, Tom.
He's supposed to say that.
Yeah, of course. He's doing his job.
Patrick Foy, congratulations. And as Mr. Foy mentions with the MTA, get vaccinated. Greatly appreciate your attendance today. Lisa, you know, it's frankly a relief, Lisa, to get off the politics for a bit or lessen the politics and get back to how serious this pandemic is.
Yeah, and the need for vaccination. You got vaccinated yesterday. How did it go?
It went well. What I can say, folks, it's a normal needle, and trust me, and I think it was 68, I had a typhoid shot that was like a horse syringe or something. This is not like that at all. To be honest, 2 Advil.
Short sleeves,
I began
no bow tie.
I began, yeah, although I wore the bow tie, I wanted to.
Vaccination bow tie.
I had to be proper for, Walter killed it, the nurse killed it. He medicated me with a shot of Chevus, and it really went well. But folks, no fear here on the needle. It's a standard thing, barely any pain, almost just a discomfort as well. You get in, you do it, and I'll be there in 19 days, 20 days, getting the second shot.
You're giving a new name to shot. Basically,
yes,
you're giving a new impression. When you talk about shots, some people have one image of a needle. You got a different image.
Yeah, Pharaoh's going to be in there. Can I get my third shot, my fourth shot?
Yeah.
Please.
Yeah, go into the bar to get your vaccination.
It is a Friday to reset, folks, and that's what we're doing here. Lots coming up. Mr. Farrow with the Open. I'll be with Paul Sweeney on radio. I have no idea what Abramowitz is doing in the next 30 minutes. It's a good one.
I'm going to go to the bar and get my shot.
Go get a shot as well. Ian Bremmer with David Weston, Balance of Power. Look for that at 12 noon as well. Finally, a pause. Futures, negative 24. Get vaccinated.
Okay, ladies and gentlemen, it's time to move up my stop and profit for Japanese yen. Going to move to 103.678. Where is it? It's right here. Okay, I moved further. Stop and profit.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City for our audience worldwide, good morning, good morning. The countdown to the opening bell starts right now with equity futures down 26. We're off by 0.6%. Market participants worldwide focusing on the pandemic policy response in Washington, D.C.
There is a huge amount of uncertainty here.
Getting ahead, control of the virus.
Uncertainty in terms of how quickly the recovery will happen.
Stimulus right now is less about size.
This package is a fiscal support package more than a fiscal stimulus package.
It sort of remains to be seen what actually comes out.
There's definitely an element of uncertainty.
We are uncomfortably more reliant on the course of policy.
Until then, the virus is going to continue to be a very significant issue for markets, but even more so for the economy.
Let's bring in the Bloomberg team, shall we? Emily Wilkins and Katie Lyons for a whole lot more. Emily, let's just start with what's next down in D.C. from President Joe Biden.
So the Biden administration is still trying to work with Congress to figure out a deal on another coronavirus stimulus package. Biden has proposed $1.9 trillion. Congress has said, hold on, that might just be a little bit too much, particularly for some more moderate Republicans and even a couple Democrats. So Biden today is going to focus his attention on providing what relief he can to Americans through executive orders. A couple things that we're expecting from him is to expand the federal food assistance program, assist veterans who are behind on their bills. He's going to try to make sure to help Americans who have not yet received those stimulus checks. And he also wants to begin to lay the groundwork today for a $15 federal minimum wage. So that would apply to federal employees and employees of contractors. His administration is also planning to meet with Congress, a bipartisan group, Democrats and Republicans. About 16 of them have formed to try and figure out if there can be some sort of negotiation on the next stimulus bill.
There is one thing, Emily, that I want to stay on top of because I think it's really important. This goal of 100 million vaccinations in 100 days, the 7-week trading daily average is about 940,000 in the United States of America. Is this goal good enough? And what underpins this goal? Is it something about supply and making sure we can carry on at this rate? Or do they think that this rate is a success in and of itself?
I think those are all great questions. I mean, Biden has been talking about this 100 million vaccinations in the first 100 days for a while. I mean, it sort of has that ring to it, has a bit of 100 versus 100. But you're right, the number of vaccinations that are currently out there is getting close to the number that Biden seeks to have. And he's looking for more support from private companies. Amazon wrote him a letter yesterday saying that they were helping to support in the vaccine effort. And I think Biden's just also trying to centralize this process. It's mostly been left to states and other localities, and he wants to bring it more to the federal level.
Emily Wilkins down in Washington. Emily, thank you. Katie Lyons, to turn to you. This equity market, just a bit of a retreat from all-time highs.
Yeah, a risk-off tone to end the week, John. A market that has been so optimistic about the recovery story, a little bit less so this morning, faced with the prospect of a difficult battle ahead for fiscal aid, as well as extended lockdowns across much of the world. The simple fact of the matter, John, is the road ahead is still long. As you say, we're looking set to open off of the record highs we eked out yesterday. Once again, you are seeing relative outperformance in tech. NASDAQ 100 futures only down around 0.5%, and the reflation trade continuing to unwind. Russell 2000, those small caps futures down about 1%. Of course, we do have to keep in mind earnings season also going on right now, John. And for a lot of those value plays, this quarterly print isn't going to be so great. So fundamentals certainly do matter here as well. But when you look across asset, you can see that reflation story losing some steam. We are seeing commodities lower, crude down 2.7%. We're seeing a bid into the bond market, bonds high yields lower, the 10-year yield down below 1.1% once again, and no surprise with the equity sell-off. The VIX slightly more elevated this morning. And finally, John, I just have to talk about Bitcoin. I will keep it brief. It started the week around 36,000. It is going to end the week closer to 32,000, set for its worst week since March, even if it is stabilizing a touch on this Friday. Volatility remains the name of the game in crypto, John.
You'll be quoting the Dow next, Kaylee. Katie Lyons on Bitcoin at the end there. Thank you. The S&P 500 down 23 with negative 0.6%. Mohammed El-Arian of Queen's College, Cambridge, the president, writes the following. The challenge for President Biden is the longer-term problem of relinking bubbly markets to economic realities. Mohammed joins us now for more. Mohammed, great to catch up with you, first of all. Thank you for being with us. Let's just start right there. The plans on the table, do you think they go far enough, the policy initiatives from this administration, to relink exactly what you're focused on?
No, they go far enough, John, to make a credible attempt to address both short and longer term economic issues. You know, the package that's on the table and what's going to come in February addresses immediate relief, addresses fighting COVID better, addresses increasing productivity and household insecurity. But the market has sprinted way, way ahead of this on the basis of what the monetary agency has been doing, and based on what central banks have been doing. So think of the gap being like this. What we're doing, hopefully, is improving the economic fundamentals, but the market is all the way up here. So there's going to be a real question mark as what does the Fed, because the Fed is responsible for the up here, what does the Fed do while this is improving? My own gut feeling is they'll wait and wait and wait and hope that the market itself doesn't have a major hiccup.
Let's build on this, Mohammed, from a behavioral science perspective, which I know is something you focused on this morning. Do you think that markets react to policy, or increasingly policy is reacting to markets?
It's the unhealthy codependency. There's no doubt in my mind that markets have been conditioned to expect ample and predictable support from central banks. And what happened this year in reaction to a 20 basis point move in the yield curve just reconfirmed this. What Madame Lagarde said yesterday at the ECB when she stressed 3 times the sentence about preserving loose, accommodating financial conditions, that reaffirms this. So the market's absolutely convinced that the central banks are there to support. And that's why every sell-off has been a buying opportunity. On the other hand, on the other side, we've seen the central banks respond very quickly to any market dislocation. So I think of it as this very unhealthy codependency. Both sides know that for the longer term well-being, they need to get out of it, but no one quite knows how to do this, and certainly no one wants to do this now.
Ed Jardini introduced the concept of bond vigilantes decades ago, Mohammed. This morning, we caught up with Mike Wilson of Morgan Stanley, who introduced the concept of equity vigilantes, just the idea that the bond vigilantes are gone and now it's the equity markets in charge of things. As a concept, is that something that resonates with you, Mohammed?
Yes, and let me explain why. On the bond side, the vigilantes have been completely sidelined because central banks are in there buying. And you don't want to compete with someone who has an unlimited printing press and is a non-commercial buyer. So bond vigilantes have really retreated to a large extent, saying, you know what, I'm not going to fight central banks that can simply go in and buy and buy and buy. The equity vigilantes have become much more sensitive to what central banks do as opposed to what happens with fundamentals. They're paying very little attention to fundamentals. They're basically focusing on central banks. But their mindset is different, John. So it's again a behavioral issue. Equity mindsets are wired very differently from bond mindsets. So it's going to be interesting to see whether they can be as effective as bond vigilantes were in the good old days.
It's something I'm thinking about increasingly, Mohammed, and I'd love your thoughts on the matter. When you think you're in control in an asset class, you get this misplaced sense of confidence. And when you look at what's happened in Japan and what's happened in Europe, as they've insulated the bond markets to become essentially zombie markets, let's be clear, centrally planned markets in the case of Japan, where they just pick a number and sit there. In Europe, where they're keeping spreads tight, tight, tight and likely to stay there. We've had low interest rates, but we haven't had terrific equity performance in both of those geographies. And I just wonder in the United States whether that's appreciated enough, because the conversation I keep hearing stateside is that you will get the returns in equities because rates are so low. But our experience in other jurisdictions, other geographies, is that's not always the case. How are you thinking about that now?
Yeah, that's a really, really important question, John. And it's really complicated. I think of it as following. The mindset for the most liquid market, which is the US, is that risk doesn't disappear. If you repress it here, it will come up here. And we've seen that. Just look what people are doing in the risk mitigation side of their portfolio. They are taking risk in the risk mitigation side. Why? Because the normal risk mitigator has been repressed so much. So I think it's a completely different mindset in the most liquid of all markets, because you believe you can get out easily. And that is at the back of a lot of people's mind. They have a very tactical mindset, not a strategic or secular mindset. It's a very tactical mindset. We're on this liquidity wave, and we're going to continue on it, but we're not going to fully commit to it. And that's why you get all this chatter about this not being the least liked rally, etc. So I think the notion of deep liquidity, I say the notion is really important. But what we found out in March is when sentiment changes and everybody tries to get out at the same time, even the US markets can't supply enough liquidity.
Mohammed, what do you think the most important lesson, or rather, let me frame it another way. What do you think the lesson that was actually learned from last March and into April actually was? What do you think we were more conditioned by? The move down or the snap back?
So I think the market was conditioned by the snap back. They took note of how the central bank responded and threw the rule book out of the window. I think my own lesson is a phrase that my colleague Robert Koenigsberger often says at Gramercy, is you can get illiquidity in the midst of liquidity. Just remember that. That's my lesson. But the marketplace lesson is it doesn't matter. We're going to be saved by ample liquidity from central banks.
Speaks to where we might be still vulnerable at the moment if that lesson wasn't learned. Mohammed, great to catch up with you. As always, my best to the family. Mohammed Al-Arian there of Queen's College, Cambridge. For our audience worldwide, as we count you down to the opening bell, we're about 18, 19 minutes away. It's just a little retreat from the record highs and a decent week of gains as well so far this week on the S&P 500. We're down 24 and off by 0.6%. On your movers is Katie Lyons.
Well, John, I have my eye on a couple tech stocks moving to the downside after earnings, beginning with Intel. Shares lower by about 5% in pre-market trading. They did beat in the quarterly results they posted yesterday afternoon, but the downside coming from the incoming CEO, Pat Gelsinger, who really doubled down on the company making its own chips, the goal of making most of them in-house by 2023. That's a business that a lot of investors actually want to see Intel get rid of, so that stock is lower on that. IBM, though, posting a bigger drop, down nearly 8% before the bell. Once again, a miss on the top line. Sales falling 6.5% down across all units. 10th straight quarter in a row with no revenue growth, John. Seagate down by just about 4%. The issue really the forecast, the guidance for revenue coming in at the midpoint around analyst estimates. Clearly, though, investors looking for a little bit more. If we flip up the board, a few rail stocks to take a look at as well. CSX is lower in pre-market trading. It beat on the top line, but missed on the bottom line by about 2%, resulting in a downgrade over its Stifel. Kansas City Southern also missed on both top and bottom line, but the full year forecast for 2021 was better than expected. Shares are actually higher in pre-market trading as a result. By about 2.5%. And finally, Schlumberger, John, EPS revenue, both surprising to the upside, but sales still down by about a third year on year. The company says the recovery in oil demand is underway and will be back to pre-COVID levels by 2023. Investors, though, clearly not convinced by that commentary this morning, John.
Kelly, thank you. Thank you very much. Coming up on this program, the vaccination rollout stumbling on the continent in Europe. We catch up with a European market bull, Jay Pilowski of TPW Advisory, with futures down 24. This is Bloomberg.
a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
To guarantee the good working of the internal market, and at the same time, we're also convinced that when it comes to non-essential travel, restrictions should be considered.
European Union Council President there weighing in on the situation in Europe, warning of tougher lockdowns as governments grapple with both the spread of the virus and the vaccination rollout as well. Joining us from Brussels, our European correspondent, Maria Tadeo. Maria, it's a struggle in Europe all over again.
It is, and Jonathan, over the past 2 weeks, the mood here clearly is becoming bleaker, and you heard it right there. Right now we have curfews, we have partial lockdowns, and travel now is being strongly discouraged. And yesterday, European leaders, as you mentioned, met. They had a discussion, and they all agreed that the situation right now is very serious. It's probably just as serious as it was a year ago, and that more restrictions may be needed. And what is clear here is that every time Europe tries to open up, the infections go up, and that means that at this point, at this rate, the vaccine is not able to break even. It's not able to get you there. And this week, by the way, there were serious issues with the distribution when it comes to the Pfizer vaccine. That is still the main and the lead vaccine in continental Europe. Now, when you take all of this into account and the concerns about mutations too coming into play, well, that gives you the PMIs that we had today. Business activity was softer in January, again, reflecting that anxiety, the renewed restrictions and the new restrictions that may be to come in the next few months. There's a lot of talk already, as you know, about a double-dip recession. And overall, Jonathan, I have to tell you, every official that I speak to in Brussels, they all tell me the same thing. Q1 is lost, is gone. The question is whether or not we can save the second quarter of the year. But again, that idea of more restrictions is increasingly taking hold here as the numbers continue to go up.
Investors speculating Q2 is going to be just as bad, maybe. Maria, great work as always. Stay safe, won't you? Maria Tadeo there over in Brussels. Joining us now is Jay Pawlowski, TPW Advisory founder, leader. Jay, great to catch up. Let's just get straight to it. Bullish Europe. We've had this huge move out of late October into year end, into 21. Now the struggle starts. Is there a big crack in your outlook given the vaccination rollout?
Well, John, I think vaccinations are obviously key for markets, and not just in Europe, but globally. We've even seen a little bit of an outbreak back in China. And clearly here in the United States, Joe Biden is going to be measured at first by his success in inoculating Americans. So this is a global issue and needs to be improved upon. And I think, to me, it just reinstates the importance of the regime changes we're undergoing. And one of them is from kind of passive government activity to activist governments. Activists on the vaccine, activists on the stimulus, activists on reducing inequality, etc. That leads to policy-driven markets, and that leads to what I've been calling a golden age for asset allocation, with a focus on thematic investing, in particular in this idea that COVID speed, the speed of the adjustment, is going to now morph into other regions and other issues like climate, etc.
I want to speak to that right now, Jay, because I think it's critical. Last year, top down from a global perspective, it was looking ahead to the back end of this year. The global cycle picks up. How do you leverage that? EM, Europe. That's the very conversation, the specific conversation that you and I were having. Thinking early 21, we're thinking less about a global recovery, synchronized growth, and more fragmented growth, at least in the near term. I'm trying to work out, from your perspective, Jay, whether Europe is still the right trade in that context, because relatively speaking, within asset classes, Europe versus, let's say, the United States right now, Europe's not looking as attractive.
Well, I mean, that's obviously a point of view that one could have, John, and I don't share that view. I mean, to me, it's not so much Europe. It's non-U.S. versus U.S. It's cyclical in value versus growth. And I think we are in a kind of rotational market. We have a broad global advance across the board, both in terms of countries as well as stocks, et cetera. It's very broad. And that breadth allows to have these mini rotations where for the last 3 months or so, we've had significant non-U.S. outperformance, significant cyclical and value outperformance versus tech. And so that allowed, in a way, a stealth correction for the tech stocks. That's great. That's healthy because we're having the correction in time, not in price. And so we're now in a mini rotation because of the COVID news and conversations like we're having today. Makes perfect sense. Hopefully you take some profits on the big moves, 30 to 40% in European banks and other things that you and I have talked about. I certainly took some money off the table on some of those positions, but still have core positions. And now we're going to allow those overheated sectors like energy, like crypto, like many of the things that ran so hard, like Europe, parts of EM, Latin America, to now cool off. That's great. And then there'll be the recovery in the COVID vaccinations. I fully expect that we will have better news on the vaccinations over the next couple of months. I still believe a global economic boom is going to occur in 2021 and 2022. I still believe non-US will outperform, including Europe, but also Japan, the Asian tech sector. Look at the shortage in semiconductor chips. Look at the trade activity in Asia, John. It's almost off the charts. Exports up 40% year over year in Taiwan. Exports up 10% year over year in South Korea. China is growing. So there is, there are reasons to be cautiously optimistic. We've had a big move. Profit taking makes perfect sense. Broad market advance means mini rotation. I think that's all good. I have a very significant position in semiconductors, significant position in emerging market tech. So it's a broad portfolio construction. And so the idea is that, not everything goes up at the same time, and nor does it all go down at the same time. So Europe selling off a little bit here, pulling back, makes perfect sense. And I would look to be a buyer on those pullbacks, depending again on where one is positioned.
It's a levered play on global synchronized growth. I just wonder how synchronous it will be in the next 6 to 12 months. Jay, it's a conversation you and I will continue. I appreciate the cycle call you're trying to make. Jay Pawlowski there of TPW Advisory. Coming up on this program, we'll run through some of the price action and the morning calls. Then later, around the opening bell, on growth versus value. If that story even makes sense right now, whether you need to be a little bit more specific than that, with Gabriela Santos of JP Morgan Asset Management. From New York, this is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We're down 21 on the S&P. We're down about 0.6%. Let's get some morning calls quickly. JP Morgan upgrading Ford to overweight with a $14 price target. The analyst citing strengthening China trends and an incoming tide of impressive new products. Your second call from UBS upgrading Disney to a buy, $200 price target. The analyst expecting its parks business to benefit from pent-up travel demand and vaccine availability. And finally, Cowen raising its Apple price target to 153 with an outperform rating. The analyst seeing upside to quarterly results due to strengthening iPhone demand. There are three of the calls coming up. A big week of tech earnings. We'll look ahead to that with futures down 22. The opening bell's next. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Rounding out the trading week in New York City this morning. Good morning. We take some weight off the S&P 500, down around about 20, off by 0.5% going into the opening bell. On the week coming into this morning, we were set for one of the biggest weekly gains going all the way back to the end of November. There's the opening bell. Switch up the board. Let's get to the bond market. Treasury yields this morning on a 10-year exactly where they were this time last Friday. Yields coming in a basis point or so to 1.09% on a 30-year, down 2 to 185. That is a flatter curve led by a rally at the long end. That is a flatter curve led by a rally at the long end. In the FX market yesterday, dollar weakness, euro strength this morning. Dollar strength across the board versus G10. Euro slightly negative, sterling much more so. Cable down about 0.05% That's the story cross-asset worldwide. Let's get you some movers. Here's Kriti Gupta.
Well, good morning, John. Let's just start with the cyclical underperformers today. Remember those stocks that were anticipating the Biden presidency? Well, those are the ones that are taking a step back today in line with that defensive tone. Let's just kick it off here with Plug Power, seeing a little bit of step back after the monster runs over the last 6 months. In the same vein, the EV companies like Nikola pulling back as well, a key piece of that blue wave trade. Cyclical underperformance really manifesting in those airlines. United Airlines right there down 2%. That virus risk narrative really not helping coming out of Europe and Hong Kong, and is also in line with those Biden favorites taking a step back. Tilray among the cannabis companies dropping for a third straight session. Flip up the boards and you'll look at the tech sector really kicking it off with Apple also still not getting love, not being able to hold its own after coming off its best 2-day rally. Twitter as well, non-stop hit for Twitter after President Trump left not only the Oval Office but the platform as well. You're starting to see those shares trade flat in early trading. And kicking it off with the earnings sector, Intel down 6%. They actually had a great revenue beat, $20 billion compared to the $17.5 billion estimate. Yet their new CEO said they're talking about manufacturing chips in-house and in 2023. Investors really not like that. IBM, of course, not posting gains for 10 straight quarters. And once again, no different from yesterday's earnings. So once again, across the board, not a very good risk on vibe. Really seeing tech and cyclicals take a step back, John.
Kriti, thank you. Great work. Thank you very much. We'll touch base with Kriti through the market day right here on Bloomberg TV. Every time I look at IBM, there's a conversation I have with a good friend of mine. Whenever we talk about this name, how on earth did an e-commerce company called Amazon dominate the cloud business and IBM did not? I still ask that question every time I think about this company. I think management that came previous to this set of management still have questions to answer. In your market this morning, we're down about 0.5% on the S&P 500. Energy underperforming, as Kriti points out. Materials, financials, it's the cyclical part of the market struggling. We're down about 0.9% on materials. On the financials, off by 0.8%. I'm sure that flatter yield curve, yields just a little bit lower, not helping. Next week, it's all about the tech heavyweights. Looking at the sector, Michael Purvis of Toolback, and this is what he had to say.
The big tech story has been sort of on the back burner, really, since it had that record overstretch in early September. And, obviously it's been small caps and all that kind of stuff that have been, sort of the flavor of the last couple of months. I think as more earnings unfold here, I think people will once again be reminded that big tech is sort of the backbone of the broader equity rally here.
For more on that, let's bring in Bloomberg's Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, next week is going to be a big week. It is the busiest by far of earnings season, but also the time in which we are going to get results from most of the mega cap tech stocks. 4 out of 5 of the largest heavyweights in the S&P 500 will be reporting over the course of the week. Together, they represent about $5.6 trillion in market cap. That includes Microsoft, Apple, Tesla, and Facebook. And it goes without saying, John, that the bar for these names is quite high, all up at least 30% over the last year. For Apple, that gain is more like 65%. It closed at a record high yesterday. And Tesla, of course, is in a league of its own with a rally of something like 650% over the past year. I can't even talk about Tesla's valuation with a straight face. We know that it's entirely disconnected from the fundamentals, but valuations for the other three are also looking quite extended. They all trade at PE multiples north of 30. The tech sector overall is expected to see earnings growth of around 2.7% for the fourth quarter. That is revised up just a touch from the 2.3% growth expected a month ago, but that is among the smallest upward revision for any major S&P sector. Again, expectations already were elevated. For some of the specifics on what we're watching for these reports, no surprise for Microsoft, the cloud is key. How is that business competing with the likes of Amazon, which you were just talking about, John. For Apple, it is all about the iPhone 12, those 5G iPhones, analysts expecting them to be a major growth driver. For Facebook, look at the top line trends. How is digital advertising doing? And also those user growth numbers. And finally, for Tesla, John, it is all about that production goal. They nearly made it to that 500,000 delivery goal in 2020. How are they going to be able to ramp that up in 2021, John?
Kelly Lyons, thank you. Looking ahead to a massive week next week. Here's the take from Gabriela Santos of JP Morgan, who points out the rotation into value to continue this earnings season, saying the following: starting in the first quarter, the top and bottom sectors for earnings should completely flip on its head. The top sectors would include the real world. Gabriela joins us now over the phone for more. Gabby, great to catch up. A note that was in your notes and got my attention: a better year for fundamentals, more challenging for investor returns. It's like the world turned upside down. Walk me through it.
Hey, Jonathan, it's good to be with you. So I think it's very, very interesting to note how this year should definitely be a better year for fundamentals. We expect global growth to print close to 6%. That's double the potential growth rate for the global economy. We should also see a huge increase in earnings growth of double digits across the major regions, led by your real world cyclical sectors. So that's all great news. The trick is we already had an amazing 2020 for the market. So we're starting this better year with record expensive valuations for a very average U.S.-centric 60-40 portfolio. So what we're really advising clients is to think extra carefully about how portfolios are positioned and try to pull levers beneath the surface to try to deliver better returns than what we're expecting to get just from your average index level U.S.-centric portfolio.
Well, before we get into sectors, let's talk about asset classes, alternatives. Where do alternatives fit in here?
Yes, and I think that's such an important piece, Jonathan. We think a lot about public markets, equity markets, bond markets, and there's still things to do there to try to ramp up returns going forward, thinking about sectors and regions. But I think, honestly, we have to pull down expectations for what we can get from public sectors. We think, on average, we're talking about something in the 4% range of returns from public markets for the next 10 to 15 years. So that's where alternatives fits in. It's really going from a nice to have to an essential piece of a portfolio to help improve the total return, to help improve income focus, and to help improve diversification as well. Of course, it's going to depend on the client,
Gabriela,
on
just
how
to
much
jump in,
liquidity
forgive
can
me,
be
the
given
one
up,
thing that really stands out there is the 10 to 15 years segment of that call. Yeah. And forgive me for interrupting, but this is a big long-term cycle call you're making. Is that what you're positioning portfolios for?
I think we have to mix a structural long-term allocation with also tactical allocation. So structurally, we're still positive on technology companies, on the growth style, on growth regions, including China and the U.S. But we need to mix that structural allocation with also a tactical layer for this year, given this big improvement we're expecting in the cyclical recovery. So that's where tactically we would overweight your more cyclical regions like Europe, Japan, EM ex Asia. Also, that's the value over growth call. So it's really a mixture of both structural and tactical. And that's how we can really improve returns, not just for this year, but for the long term as well.
Gabby, great to catch up. And I've been saying this a couple of times through the week. You and I haven't spoken for a while, so I get to say Happy New Year to you on January 22nd. So Happy New Year. Great to catch up.
Happy New Year to you.
Of JP Morgan Asset Management. Thank you, Gabby. Let's get to the price action quickly, shall we? Equities, not doing a lot this morning. Beneath the surface, a lot of churn. It's Kaylee Lyons for more. Hey, Kaylee.
Yeah, a lot of stocks moving to the downside this morning, John. One of them is PPG, the paint maker. It's lower by around 3% in the first few minutes of trading. Did beat on the top and bottom line, but the forecast is the problem. The company saying the first half recovery may take longer than expected as COVID restrictions are still hampering manufacturing. Taiwan Semiconductor also lower to the tune of around 3.5%. I was talking about the Intel story earlier this hour, looking to commit to making chips in-house. That is weighing on its competitor today. AMC Entertainment also is lower to the tune of around 2.4%. Investors in that stock and lovers of James Bond, John, may be a little bit disappointed this morning. The latest Bond movie getting pushed back again, this time to October of this year, was originally slated to come out in the fall of 2020. Speaking of entertainment, DraftKings is lower as well. It's a sports betting company, as you know, and with the fate of the Tokyo Olympics hanging in the balance, maybe fewer things to bet on this year. The London Times reporting that the Japanese government is looking to cancel those Olympic Games after already delaying them a year because of the pandemic. So that may not be the gambling boon that many were hoping for, John.
Daniel Craig just holding on to that position, isn't he? I wonder if that's him just delaying the movie release, just so he can hold on to being Bond for a little bit longer. Personally, I'd like Tom Hardy to take the position, but that's, you'd be sad. You'd be sad. Who would you like to replace him, Kaylee?
I'm sorry?
Who would you like to replace him?
So have you seen Bridgerton, Don? Bridgerton? Because I've heard some rumors that the actor from Bridgerton may be the next James Bond, and that would make me incredibly happy.
That sounds like a Tom Keane program. Kaylee Lyons on the Netflix favourites and the next James Bond, and the price action too. Equities down about 0.5% on the S&P 500. Up next, we'll run you through some price action, get you the latest economic data from the United States of America, and the outlook for next week as well. We'll catch up with Michael McKee and get the view from BlackRock too. Much more still to come. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
We're going to have very fast nominal GDP growth. We haven't had that during past recoveries. And so the way you deal with that recovery from a central bank perspective has to be different. And clearly the Fed is taking all these inputs in. From our standpoint, I mean, we own 150 to 200 companies around the world globally. And what we see is an economy that will be poised to grow quite strongly coming into the second half of 2021.
Henry McVeigh of KKR looking ahead to the second half of 21. We're looking into next week as well with the economic data coming through from the United States. More data due in about 60 seconds time. Looking ahead to all of that, Bloomberg's Mike McKee. Hey, Mike.
Good morning, John. Well, this is PMI day. We get the initial PMIs
Purchasing Managers Indexes for manufacturing and services from market. It's not the ISM numbers, but they do get some more following these days as we track higher frequency data. Europe told the story this morning, and what we saw there was strength in manufacturing. Most countries seeing an increase, but really tough numbers for services. The service industries suffering from the lockdowns that have been put in place across Europe, and of course that's what we have had in place here. So the betting is we're going to see strength in manufacturing here in the U.S. and some weaknesses in services. We get those numbers in about 15 seconds. A little bit after that, 10 o'clock today Eastern time, we get existing home sales. Something to watch because interest rates have been so low that we have seen strength in home sales, but it's started to slow. And the question is, do we see that continue? Because it's one of the few things holding up the economy right now. All right, the market numbers are out and manufacturing is strong, stronger than forecast, stronger than last month. It comes in at 59.1. The forecast was for 56.5. Last month it was 57.1 for the final there. The services index comes in at 57.5. That is up from 54.8, and it is sort of counterintuitive given what we've been talking about with the lockdowns. The composite 58 up from 55.3. So good news from market. Market tends to look at smaller companies than the ISM. So it may be a good sign overall for the economy, at least this indicator in terms of where we are in the middle of January. The other big news of the day on the economic front, Janet Yellen comes up for a vote in the Senate Finance Committee today on her confirmation. She is expected to easily pass, and her nomination goes to the floor. They may vote on it today or possibly Monday to become a Treasury Secretary. She made some news yesterday answering written questions from the committee as they look forward to her as the Treasury Secretary. They wanted to know her feelings on the president's plan to raise taxes, Republicans in particular. Here's what she had to say. President Biden has proposed an array of reforms that would ensure the wealthiest taxpayers and corporations pay their fair share. These and other proposals will be further developed as part of the budget process, and if confirmed, I look forward to continued conversations with you about the president's legislative agenda. It's a bit of a dodge, but it does leave the door open for tax increases. She's also saying that she's going to look at the impact of the SALT tax caps in states like New York. She didn't commit to getting rid of it, although President Biden has suggested he would, and she wants to work on the digital tax dispute with France and other European countries. Support for corporate tax increases, and says there's still support an estate tax increase, John, although it would only hit the very richest, largest estates.
It's fair to say she's got some experience of just diplomatically dodging questions and not committing to answers over the last several years over at the Fed. Mike McKee, great to catch up with you. And as Mike points out, that is a tremendous beat on the services PMI in the United States. That's the kind of data you want to see. In January, unexpected. We want to see a whole lot more of that for this economy to snap back and snap back fast. As Mike points out, next week we get a Fed decision, the first Fed decision of the year as well. Joining us now, I'm pleased to say, is BlackRock's Michael Fredericks for more. Michael, I just want to start there on the economy, if I may. The snap back in the economy in the US, do you expect it to be just as fast as what we saw in the middle part of last year into the summer?
Well, we do think that it's going to be a really sharp recovery. We think there's a lot of pent-up demand. Obviously, there's some uncertainty around the timing with the vaccine rollout and such. But we're bullish on not just the U.S. economy, but also the global economy, and have been leaning into that in our portfolios.
Walk me through how that shapes your view around duration in the portfolio at the moment, Michael.
Yeah, we're pretty cautious on the path for interest rates. We think the risks are tilted in favor of higher rates, not lower rates. And so we're actually running all-time lows in duration in our portfolios right now. So, I think one of the things that hasn't been talked a lot about so far is there's been a lot of discussion about the equity rotations into value and cyclicality. But in the fixed income market, what we're seeing is because rates are really, really low and moving higher, it's a pretty difficult backdrop for investors that are sitting in treasuries or investment grade bonds where there's a lot of interest rate risk and not much yield. And then when you factor in expected inflation, you're dealing with profoundly and deeply negative real yield. It's a real tough situation for income-oriented investors.
Michael, I know one thing you've been thinking about is that rotation away from credit on the fixed income side into equities for a little bit more equity income. Before we get there, can you just walk me through how loans stack up in a portfolio? And if you're thinking increasingly about rates and a risk to the upside, how loans can complement that view?
Yeah, we like loans. We've been adding to bank loans, so that it's probably a bit early. So in our view, the Fed is going to start telegraphing their intention to taper QE sometime later in the year. We're still a couple of years away from actual moves higher in Fed funds, but I think investors are going to start to rotate towards bank loans and look to benefit from future higher rates of short-term interest rates. So we like loans. I think there's good carry there. We think it's for the most part, you're talking about, although they are not investment grade for the most part, we think that that's a relatively safe place to be given all the stimulus that's supporting the economy. So like that part of the market. We also still like high yield. I think one caveat here is that, because there has been a big rally already, yields have been driven lower to fairly low levels. And there's not a lot of price appreciation that investors can expect, which kind of gets us to our thesis that that's a good place to be if you're an income investor, but also look towards equities, in particular dividend-oriented equities, for your upside or your price appreciation.
Well, let's build on that then, Michael. What are you selling down? What's funding that rotation into equity income?
So we've been we're out of investment grade bonds at the moment, and we've been paring back a bit on our high yield and rotating into more dividend-oriented stocks. We also like covered calls on the growthier parts of the market that don't necessarily generate a lot of income or dividend yield. But I think, one of the big themes you're going to hear I think that will dominate 2021, and we haven't heard much of it yet, is this idea that there is really compelling dividend yield out there. And in many instances, you can buy blue chip companies where the dividends are not only much higher than their respective bond yields, but there's also a great track record of growing that dividend stream over time. And as it says on the label in fixed income, your coupons are fixed, so that compounding of dividends, we think, is a really attractive feature for income-oriented investors.
Michael, for the less sophisticated investor who can obviously look at the numbers and say, yes, I can get better income from the equity market than I can in fixed income right now, what you're speaking to takes a little bit of homework. Can you just point me in the right direction here, where you're looking at specifically to get that compounding return on the equity side?
So there are a number of investment strategies around BlackRock and we own many of these in our portfolios that are specifically oriented to trying to find good quality, high quality companies, global names that have good, high levels of yield, but also where we think that the business model is really poised to deliver not just earnings growth, but also dividend growth. There are also some ETFs out there that also kind of offer those same sorts of features. So it's a little bit different than just buying the highest yielding companies. Usually when you're looking at the highest yielding stocks, oftentimes they don't have much of a track record of increasing their dividends, or in some cases, maybe their business models are more compromised and they have very slow growth. So it's hard, you shouldn't expect that those types of companies will increase their dividends in the future.
Michael, great to catch up. Appreciate the insight. Come back soon. Michael Friedrichs there of BlackRock, helping us work our way through where to find income in a world that suffers from a lack of it at the moment. From New York City for our audience worldwide this morning, good morning. Stocks retreat just a little bit, down 1/3%, unchanged on the NASDAQ. That services PMI in the United States of America, looking pretty decent. Up next, your trading diary, a look ahead through the weekend and into next week. This is Bloomberg.
Okay, ladies and gentlemen, I'm going to place an order to sell short euro at 121.66.9. Okay, order placed at 121.66.9. That's it. Let's wait and see.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
About 25 minutes into the session in the equity market, we're down by about 1/3 of 1%, the Nasdaq negative 1/10. We pulled back from all-time highs across the board, just a little bit here, no drama. On the 30-year yield, we were a little bit lower than where we are now. We're down just a basis point or so. PMIs in the United States, really quite decent. Upside surprise there going into next week where we get more economic data and we'll hear from the Fed as well. That's the data, the price action. Here's the story. Through the top of the hour, the Senate Finance Committee considering Janet Yellen's nomination to Treasury Secretary. President Biden discussing the pandemic and issuing another round of executive orders at about 2:45 this afternoon. And looking ahead to next week, we get a Fed decision on Wednesday, plus earnings from big tech featuring Apple, Facebook, and Google. What a week we've got coming up for you. Great to be back in New York City with you. Continue the conversation through the weekend with me on Twitter at FerroTV. This was the countdown to the open. This is Bloomberg.
New position opened at 121.66.9. It's a short position on euro.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.